Hello, and welcome back to another episode of VUCA Insights podcast, where we bring you the latest in investing, entrepreneurship, and growth mindset. Today, I have a very special guest. He is trying to be the next serial acquirer in Malaysia, and I have the pleasure of having Eric Tan, CEO of Catcha Digital Group. Thank you so much for coming to this podcast, Eric.
Happy to be on the show, big fan, and thank you so much for taking the time to set up this whole amazing setup for us.
Yeah, just the geek in me, and then these big boys toys, kind of thing.
That's true, very expensive toys.
Yeah. So before we dive into what Catcha Digital do, for those of you who don't know, Catcha Digital is, I would say, a serial acquirer in the media space and the technology space. Is that the right way to describe it?
I think that's fair, yeah.
Okay. So just to get to know you as a person, Eric, are you a KL boy, Penang boy? A little bit of background, what was a 15 to 18-year-old Eric like, and how do you even land in this industry?
Yeah. Actually, that's a very apt question, actually.
Yeah.
I often think about what are some pivotal moments that in my life that define who I am today, as I reflect on an annual basis, right?
Yeah.
And 15 and about 17 years old, I think is a big point. A few of my very close friends passed away from my high school for an accident, from a dragon boat accident.
Oh, that dragon boat. Oh,
yeah,
okay.
So this was when I was 17 years old, and this was five students passed away. 3 of them were proper close friends, and those friends was quite interesting because growing up, I spent a lot of time with my friends because my family household, my parents were not exactly in the best of terms, right? So I think now I think back, I spent a lot of time outside. I was very fortunate to be able to meet a lot of friends that turned out to be very inspiring to me. And some of them had that desire of just exploring and getting out. So I grew up in Penang. And a lot of Penang people are damn proud one, right? And they proudly will introduce themselves. They're from Penang, and it's the best state ever. I was one of those. Very narrow worldview, right? Never really see the world that much. I'm always wondering why this Kuai Lo next to the beach would come to Penang. What's so special about the state? And hopefully one day I could be like the person.
Yeah.
And one of the things I learned from some of those friends was the desire to just explore and learn and adventure, right?
Okay.
And I wanted to go abroad, right, to study, and I didn't know how. So it's kind of figure your way out,
Yeah.
And then eventually, I figured out that maybe it's a bit of a burden for my family to do that. And I'm very fortunate I got a scholarship to study abroad. So I did A-levels in college at Sun UEM, which is one of the top A-level schools in town, and I studied in LSC. And that 3 years was quite a formative year for me. The first year I was struggling, right? Because from not barely traveling at all to going to London, one of the most diverse city in the world.
Metropolitan.
And you feel very insecure, do people understand my English? And so people from different culture are they judging me and whatnot. And I think that was quite a formative year because then you start to learn how to be comfortable in your own skin. And it took a while. First year was getting used to, right? And then second year was, okay, I think I know what I'm doing, right? You join all the societies and you develop some skills. And I was just conscious about what I was trying to do because my plan was never to stay in the UK. Right, so I a lot of friends that went to LSC that you just go first year, go spring week, right? So everyone it's like a banking school, which I didn't know, right? Before I went, I thought, London School of Economics sounds pretty cool and maybe for business and whatnot. I was very naive in many ways. And I went there first week, apply for spring week, go to Goldman Sachs, and I did that also, right? So, okay, let's
JP
just
Morgan.
Go. Right, so I did my spring week with Credit Suisse, and then eventually I got a summer internship for my year 2. I did the whole shebang, and then I got an offer to go back, but I was very clear that it's just an experience, right? So I rejected it. And I had a scholarship and I had to come back. And that few years, one of the most pivotal kind of experience was my final year before I came back. I was very interested in tech, right? Technology space, startup, right? Those days Uber was Airbnb was taking over the world.
Yeah.
And through a introduction of a friend, I got an opportunity to work in a VC fund.
I see.
Right. So today they are one of the top B2B fintech fund in the world. But at the time they were just starting out, right? So 5-6 people.
You're talking about Sequoia kind of size now, is it?
Not as big. They are very boutique, very niche. There's a company called Illuminate Financial, and they focus on B2B fintech. It's super boring. I was there, I have no idea what's going on because it's not a place for a fresh grad. Because it was an introduction from a friend, they needed an intern to do some grunt work. I'm like, sure, I will do it. So I joined, and I spent spent 3 months there, and it was very formative for a few reasons. One, it opened up my eyes to VC investing. And I was never really that interested in VC investing. I was more interested to be a builder, right? To be an entrepreneur. But I thought it would be interesting to see it from the other side. And I did that for a while. And why is it formative? It gives you a very broad perspective of how businesses are run as one. But also I was working with highly caliber people in the fund. And they left me a few things to take away, right? One of the things that they say to me is, Eric, like the first 2 years of a career, and these are all like McKinsey, Bain folks, right, that works in like big banks and whatnot. They say, hey, Eric, the first 2 years of your career, you have to figure out quite quickly, you will figure out quite quickly, you and your friends are no better off from each other because you might make more money, but you're less happy because you have less time, right? So the typical McKinsey fashion, he draw me an X and Y axis. It's like, on the X axis is time. On the Y axis is satisfaction in general, right? However you define
happiness
it.
Or whatever.
Happiness, right? You make more money, you like it, or your friends, colleagues are very fun, your job is very fun.
Correct.
So first year, it will be like, okay, about the same. First 2 years, about the same. First 5 years, about the same. And then after 5 years, it goes up, goes flat or goes down. Very much depends on the first 5 years of your career, or more specifically, first 2 years.
Okay.
Right? Because 2 years after that, you can't say, hey, I'm an LSE graduate, I'm a Cambridge graduate. Nobody cares anymore.
It's not. It's
right?
part
It's
of table stakes. Table stakes in the
What have you done in your first 2 years? Right?
Correct,
That will be a difference in conversation, and that stuck with me for a while. And the second thing is that for you to be able to make good decisions for your first few years, you need to know what you're trying to optimize for, right? Like what is the long-term goal that you have, right? And that was like the big question I have with a lot of my close friends, a very philosophical question. What do you want to do with your life? And I spent a lot of time at university to figure that question out.
I see.
And in a typical Charlie Munger fashion, I told myself, okay, what do I not want to do? So I eliminate first, right? Invert it. Like what are things I don't want? Okay, so I tried a bunch of stuff, and there are some courses that I don't care about. I don't really want to work in a bank because I don't see myself, being in a bank. I don't think I'm like a corporate person. And then eventually, through that process, elimination, a lot of reflection throughout the years, I decided, okay, my professional career in my mission is to create meaningful jobs back home, right? And that has been, in many ways, my guiding point to make decisions on what do I do with my life, right, when it comes to career. So that clarity was very helpful, right? So one is what is a long-term goal, and two is that how do you make decisions towards that, right? And understanding that sometimes you go off course a bit, but you have like a lighthouse.
You have to meander, right? But you anchor.
Yeah.
There's a North Star.
So that's the 18, 20-year-old Eric trying to figure out life. And I read a lot. Right? Those days, I read so much as I try to figure out. You read like philosophical book, you read like a spiritual book, trying to figure out like what is life all about. And obviously, we are very privileged, right? Like I was there on a scholarship. I don't really have to think about, hey, I need to find a job to justify the RF for my parents.
Correct.
And a few of us are like that. Right? So it's like a very close group of friends. And when I came back, those two things stuck with me for a while because I was serving my bond with a company here. Okay. But at the same time, I was like, I don't feel very fulfilled. Yeah. And I was doing a bunch of stuff. I was like doing part-time work, trying to moonlight a bit, work for like a UK startup, and trying to get
based in
KL.
KL.
Based in KL. And it works because 9 to 6 I work day job, and 6 to 10 I can work for the UK company. Yeah. And then it came to a point where I decided, you know what, this is not the right place for me anymore, right? Like months 5, 6, the colleague of mine, his name is Rezo, is a Hungarian dude, right? Okay. That thing about, hey, Eric, the first 2 years, like the echo, right?
X and Y.
It's like you have to think about like what's next. And throughout that period, I wanted to break into tech. But it's very difficult as a fresh graduate in 2016 where barely there's any opportunity in here. Grab was just about to become a unicorn. And it's very difficult as a fresh graduate to break into the industry. So I did a few things, right? So in my VC internship, another colleague who is like kind of like my mentor, he came from a fairly modest background. And VC as an industry in Europe is very selective, right? Like very small, like 500 people probably you can count with your like the whole industry, right? He did not come from a top school. He did not come from top banks, but he somehow break into the industry. And the reason why he managed to do that was he was the first person who met all the blockchain and Bitcoin company in 2015. Oh. This was like the nascency of the whole blockchain and Bitcoin. Today, we look at cryptocurrencies like an everyday topic, but those days, there's like maybe 150 companies in the world. He knows every single one.
I see.
Right. So his advice to me is, Eric, early on, honestly, as a young graduate, the only advantage you have is focus and time, right? Like you don't know anything. Right? The reality is you really don't know anything, right? So pick a niche and be whatever that niche is expert in it. And I took that to heart, right? So I came as, okay, what are the things that I can do that I can get into the door, right? Because I'm at 23 years old. Who wants to take a meeting with me, right? So then I realized there's a gap in the market and nobody covers startup and like who is the big investors, right?
I see.
They invest in Grab and some of these companies those days. And I started writing online. So I work with a friend who has access to PitchBook. Those days he works in IB. And then we started like pulling data about Southeast Asia landscape.
Scrape lah. In a way, you scrape.
You pull so you can generate some of this data, and it's not a lot of data those days, right? You have like K-Feed lah, now it becomes Fave, and then you have Grab, you have a few
Chen
of
Chao
those,
the Chen Chao and
the
gang,
right? And I wrote about the report. I wrote about the state of Southeast Asia startup scene, right? Like who are the top players, who is doing what, who are the top funders, and what do I think is going to happen next. And because nobody writes about it, it was very easy for me to distribute this. Tech in Asia likes this, E0019, these are all like the tech publications that will just take whatever content. Today is very different. Today you have like people just like trying to send them content, or you can use AI to write content.
Correct.
So that was like in some ways my little niche that I found. So I used that, and I got to know a lot of people through that. Everyone said, "Oh, this is very interesting. I want to learn more." And then they're like, "Okay, Eric, can I buy your coffee?" And I'm like, "Great, let me pay for the coffee. Don't worry, but I want to meet you, right?" So that was my starting point of how I got to know Patrick, my chairman, right now. Right? So those days, the Catcha Group team, right? So it's like private investment vehicle. It's quite a lean team. So his chief of staff was looking for someone to help out with some research work.
Understand.
And then they found this, and then through that, like I got introduced to them, and then said, okay, sure. Like those days, I didn't really understand what they do. And then I thought, hey, they just bought a bunch of like random companies and put it together. In my mind, entrepreneurship should be like building from scratch, like organically, right? That's like the old school style.
Blank sheet of paper, and you
take your time, you build it up, right? There's this negative connotation that is associated to M&A, right? And I was 23 years, so what did I know? So I was like, okay, sure, let's do some work. So they were looking to buy some IoT business. Then they came to me and said, hey, Eric, can you help us prospect out the list? And then find a contact. And these days, again, it's done by AI, but those days you have to like a human to sit down and do it.
Yellow pages.
You go read every single website, try to figure out their size and whatnot. And then the relationship was built there. And then at some point when I was, so this is like my freelance time those days. And they say, hey, like we want to expand the team. Would you be interested? And then at the time, like, what do you guys do? I'm not sure lah. So I introduced some of my friends. The guy that wrote the report with me, I was like, hey, like he's based in the UK. I said, hey, like these guys are hiring. Maybe you fit the profile a little bit more from IB and whatnot. And then my friend said, oh, no, like, a bit too early. I still want to build my career in the UK. And then we just kind of kept in touch for a while.
Understand.
And then like 6 months down the road, they came back to me again and say, Eric, like, we really want to expand the team. We really want you to join. Would you be interested? And then I was like, okay, let's talk. Okay. So that's when I met Patrick.
I see.
So at the
prior
time,
to this, you didn't really...
I didn't interact. Maybe he saw some of my output, but I dealt it through his chief of staff, Dinesh. And he was looking for... And when I met him, it was very interesting because he's quite different from the typical boss that you think, right? I was very transparent with him. I said, hey, like, I'm not sure whether this is the right place for me, and my interest is to build business, and this might be a cool place to learn for 2 years, but I don't know what will happen after that.
Wow.
I was quite transparent, right? And then he's like, no worries, it's fine. Like, just come on board first. We'll figure it out later. And I think what he was really valuing was, now in hindsight, I was reflecting on it, is like the desire and the proactiveness, right, to do stuff and be able to deal with uncertainty, which is basically the whole job of being an entrepreneur, right?
Yes.
And also that time, the business that they were running, iFlix, was doing a lot of work with like Chinese we're trying to get more inspiration, understanding of how the China player were doing. So you have in the West, you have Netflix and Hulu and the likes. In the East, you have iQIYI, Youku, and those guys. And none of the iFlix management speaks Mandarin.
Oh, right? Including Patrick himself, right?
No, he doesn't. He doesn't, right? Like, Luke speaks a bit of Mandarin, but like they are not a consumer of the future, right? So they also wanted like someone who understands Chinese very deeply.
That nuance.
That nuance, right? Like, why do you design your UI a certain way? How can you cram so many things into one
One page.
right?
Yeah.
And it's because like Chinese character, you have 2 characters, and in English you might need a full sentence.
Correct.
So there's all these like cultural nuances that I think they were looking at, and that was probably like a good example of right place and right timing. And I happened to be fluent in English, but at the same time also very fluent in Mandarin. I can understand the nuances and explain it from a more first principle point of view, right? Because for them, I look at this, but I don't really know why they designed that way. I cannot just copy paste because it doesn't work, right? And there were like a lot of features that's very unique to the Chinese market, where you have like, they call Tanmu, where you have floating text.
Yes.
And you'll never see that in the West.
The English, you find it annoying because it's like blinking and all that.
And then there's like a cultural nuances to why they do that. So we have to go, one of my first tasks was to help them figure out like the product direction of iFlix, right? So I think another thing that is quite unique about Patrick is that he's not worried about giving big responsibility to people. It's like, you go figure out, which I appreciate, right? So I joined, right? And the expectation was, I say, hey, do you have a job description? Like, no, right? Let's just figure it out, right? So eventually the whole idea is that I was like probably Patrick, Luke, Dinesh, and then myself, right? When I joined. So it's like four-man team. And the idea is that you do a bit of everything. You buy, you build, you invest. And I was quite clear about my intention. Patrick's like, no worries, all good, right? Like we can work with that. So I did that. 6 months in, there's a project at Catcha, and they say, hey, like, is there anyone who wants to build this business in Indonesia? And I'm like, sure. So I raised my hand, let's do it. And then they said, Eric, can you find a partner to do it with you? So I pulled all of my uni friends, and he left Astro to join me, and then we left and moved to Indonesia to build out a live streaming business.
Wow.
So we moved to Jakarta for a year. The business didn't work out, but it's a very formative year, right? It's like your first time of really getting very hands-on as like a founder of a business, to go through the pain of like iterating the idea, selling a dream to your staff, and 20 people join you, and then going through that cycle of then doesn't work out. How do you manage the conversation? And in a foreign place, like you don't really have help. Like yes, you get some network from the Catcha group of companies, but you're kind of really on your own.
Correct. There's no cavalry to call, actually.
No cavalry to call. So that was like a very good learning experience of building something from scratch, right? And it's always like very glamorous. You read TechCrunch, you read all these like publications. Wow, like all these businesses raise a stupid amount of money, do so well and whatnot. So there's that first-hand experience of pain, right? Like the pain of like staring into something that doesn't work and try to pivot, it still doesn't work. Eventually you say, okay, you know what? This is not going anywhere. It turned out the idea is kind of the fad, right? So we're copying some idea from the West. Then work out and move back. And then Patrick said, okay, iFlix is on fire. Like I need help, right? So then I was like, okay, sure. What do you need me to do? So eventually, what was happening was he was focusing on raising capital. Luke was focusing on like the CFO kind of work, and keeping things in order. Dinesh was like growing the business, and then me and Yongen, like my other colleague, was trying to pivot the business from a Netflix business model. So what we used to call SVOD, or subscription-based video on demand, to an AVOD business, which is like YouTube today, where if you don't pay, you get ads, right? You pay, you don't get ads. So whereas today's the world is all like that now. Netflix is moving towards that.
Moving that, exactly.
Spotify is moving towards that. And the reason why was at the time the subscription model doesn't work in Asia. Right? You're fighting against piracy. That was problem number one. You didn't get people to pay first. So the monetization model didn't work, and that was again a very formative experience, because it is very difficult to fix a struggling business where morale is very low. If your business is not doing well, it's okay, but the morale is so low because the business is not doing well, and then you come from the high, and then you start to struggle to raise money, and then you struggle to hit the metrics. And then suddenly the shareholder parachute, like 2 guys coming into your product team and try to tell you what to do.
Micromanaging.
And they were like, you guys, like, so you can feel like the distrust, right? So it took us so long to say, hey, our only mandate is to help turn this business model to a new one and grow the business, right? Don't worry, we're not here to spy. And it takes a lot of time to educate or to gain trust, to build trust. And the challenging thing about trust is, like my personal philosophy, trust is consistency over time, right? The key thing is time, right? And the time is something that we didn't have.
It's a scarcity.
Time is something we didn't have. We're running against time. And that was a very formative experience of like stakeholder, right? Like you need to figure out how the nuances of like people dynamics, and product role is by nature you're dealing with people from engineering lah, the business lah, the marketing team. Everyone has their own interest, and then they have their problems at another layer.
Yeah.
So did that for maybe 9 months or 9 months, and then I told Patrick, I think the business is like what I was set out to do is in a good shape. I don't think I can add much value.
Yeah.
And then he said, everybody want to do. And I told him, like, I think I want to go on and do what I told you 2 years ago. I want to build a business now. And I said, sure, let's figure out what we want to build together. Right. So we hired a team of people. Like, so that's where I think maybe you have met Oscar or Cedric, some of those guys that work in Catcha, right? I'll just say maybe 2019. And say, hey, let's hire a few people and just go through all the top ideas in the world.
Okay.
Right? And figure out what we want to do next. So hire a bunch of them. We had this unicorn sprint. We call it unicorn sprint, right?
Something like a hackathon equivalent, idea hackathon.
Idea hackathon. Right? So every week, okay, let's find what's interesting out there, right? That we think could work here, and something that we also can personally relate to, right? So not just the idea has to be good. You have to be something that you feel the pain, right? So it cannot be something that we cannot relate to. So we did that for maybe I think a good 3-4 months.
Nice.
And now that you talk to Oscar, that was the toughest period of their life, right? Because there's a whole cadence to it, right? Yeah. Monday you decide what idea, you pick one, and then the next few days just like the camp, boom, 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 boom. Right? End of the week you're expected to present, and there's like a whole format to it, right?
I see.
And in some ways it's like a crash course to understand how all these business model work.
Nice.
But it's very intense, right? And it's designed to train them to be to the level of intensity. Like, I think at least my style is like you start them hard, right?
Yeah,
you just get easier from there. Rather than you start it easy and then you get harder. It's like high school, you got a strict teacher that comes in on the first day.
Correct.
You're like everyone damn scared, but then eventually the teacher is actually the best teacher.
Yes.
So it's kind of that philosophical approach. So through that, we found an idea that we think.
If you don't mind me asking, how many ideas that actually survive and how many ideas that actually
So we probably looked through easily like 30-40 companies that is like private companies. These are all private
within Malaysia?
Globally.
Okay.
So like who are the top funded business in US and China. And the tricky thing about that exercise is that they may raise a lot of money, but it doesn't mean that the business model works.
Correct.
Because in a startup world,
correct,
it takes a while to see through that.
Yes.
And that's one problem, right? Is this going to be sustainable business model? And two is that will it work here? And you might see Pinduoduo as an example.
Correct.
Because it's super hot, right?
Yeah.
Super big in China, but it's very difficult to replicate the model here because the supply chain is very different.
Yes.
And we had to understand that. That's like MBA in some sense, right? Understand the nuances of all the businesses, right?
Population density, logistics costs, all this localization. A lot of people just copy and paste, and then it doesn't work.
Doesn't work. Yeah. So those was like, and why that exercise is very important is because apparently I had this conversation before, right? He said one thing that he taught me is that, hey, like there are a lot of smart and hardworking people out there.
Yes.
But there are only a few Anthony Tans out there. Right? Okay. And the reason is because you have to work on the right idea, a big idea at the right time.
Correct.
Right? And he had this joke, right? Say when Anthony started out, he came to me and asked for like $1 million investment. But I told him, I'm not going to fund your side project. Right? And that's for 30% of the business, right? Grab. And then
that time was 1 million
like
for 30?
day one, right? Like,
wow.
And then he's like
ground floor.
and they were friends, right? They were on the flight to Philippines because I think at the time Patrick had like a Filipino partner, and then I think Grab was trying to do some work there. And he didn't. And then he always joked lah, if I did that, we wouldn't be sitting here. We'd be like on the private jet to Qatar watching football World Cup already. That's 2020, right?
Correct.
But his point was, there are good business model and there are bad business model. And you have to be very conscious. And his reflection was, iFlix was a good business, but not a great business model. Because it requires a lot of inventory, buy from Disney, and then this whole
royalty payment,
look classic,
rights.
like Porter's 5 Forces, your supplier are like top 5 studios in the US.
They will squeeze you.
They'll squeeze you, right? And whereas like iProperty is a superior business model, right? Because it's a very fragmented marketplace.
Correct.
And when you scale to the top, like all the power comes back to you. And those are like the times that you learn about, okay, what are good businesses, what are bad businesses, and then we narrow down to one that we think, okay, these are quite good business model. We understand it's like a iProperty 2.0 plus like an Airbnb kind of approach, like a digital rental platform. And then I left. So and then I said, I'm gonna go raise some money. He's like, hey, no need to raise lah. I just invest. Right. So then he became my investor.
Okay.
Right. So in 2020, he's like, yeah, I just invest. Don't bother. Don't waste time. Like, don't waste time.
This was in the middle of COVID, or
this was just before COVID. Actually, in the middle of COVID. Actually, you're right. In the middle of COVID. May 2020.
Okay.
I said, don't bother, right? You're going to spend whole year raising money. Why not I just invest and you just go build? Like, skip that part, right?
Okay.
And I'm like, okay, sure, let's do it, right? So he became my first investors, and alongside a few early employees, right, invested in the business, building it out. And we took 2 years to figure out, okay, this is not going anywhere, right? So another time, right? Like where you had a big goal and you set up a team and you try to scale. And it's also a function of the circumstances where at the time it's like go, like you go big or go home. You raise capital, you burning capital, like don't worry as long as you grow. But in COVID it was a very interesting, I would say, time to build a business because nothing was actually normal.
Yeah.
Right, like you have metrics that works for like 6 months, but then policy changed a bit and then the whole thing collapsed again. And then the stock market was very hot.
Correct.
And then it became a complete opposite, boom, down, right? And it was very difficult for us to, sometimes in the startup, you kind of have to get from one milestone to the other. You can try to fake it till you make it. But we're getting to a point where I don't think any fake it will make it at all, right? And we were scaling to a very big team and then realized, okay, this business model is getting more and more, as you pivot, it's becoming a lot less like what we wanted it to be, a lot more like a traditional real estate agency business. And then we asked ourselves, is this a business that we are most suitable to run or to build? And we decided, you know what, this is really not our kind of business. And it's like, if you want to go for a VC type of outcome, it's go big or go home, right? Like it's not going to be like you make 2 million profit a year and you're fine, right? But the investors who want this to be like 100x.
Yeah.
And that's just a VC math, right? The nature of the math, it works that way.
Correct.
And then we said, okay, let's find other ideas. And then throughout the 3 months, it was very difficult because you're managing like cutting your staff, right? From 80 people to 20 people. And then you're managing to make sure your customers are taken care of, their transition to whoever they need to transition to, the morale. But someone asked me before, hey, was it very like emotionally draining? Then my answer there is like kind of yes and no, because it's my second time doing it, right? So the thing that I did a bit differently in the second time was I told the team, hey, this is the big plan. There's a good chance we're gonna fail, right? But in the small chance that we win, it's gonna win big, right? So everyone come in understanding the risk that they take on.
You've already anchored it right lah, in a way lah.
So I think to me it was expectation, right? Like the last thing I want is that Eric conned me into it. Right? Like we need people to know that what are they walking into, and these are the risks. And these are the reward, right? If it all works out.
When you had 80 staff, what was the main revenue generator profitability?
So it's from transaction revenue, from like matching the supply and demand, like so the tenants and the landlord. The idea eventually didn't work out because we found that landlord is very hard to digitize the whole experience, an older population. And
understand.
And then as you pivot, you need to hire people to serve them, and then more and more it looks like a property service company.
It becomes like a Rip Field or Henry Butcher's.
You're right. So then it didn't really work out, and at the time, it was not that difficult because we have very clear business plan. We have a baseline. We know what we're trying to hit, and we know it's like what is sensible, what's not, and we just keep iterating, right? So some people say, hey, like business plan doesn't work. I'm like, yes, business plan will change, confirm, 100%, right? But if you got no baseline, you don't know what you're measuring against, right?
You don't know your benchmark. You don't know what you're measuring.
And as much as all these gurus say business plan doesn't work, it does help you think.
Yeah.
Right? It's not like you have to follow blah blah, but it helps you think.
I understand.
And when it didn't work out, it was fairly it was a very easy decision to say, okay, this is not working out. We can't find like other options. I think we need to do something and stop losing our investors' money. Understand. Right? And then we said, okay let's shut it down. And at the time, like now in hindsight, I was quite burnt out, to be fair, right? Like my body was not in the best shape, and like back pain and all kind of stuff, right? And we I was trying to figure out what I wanted to do next. And this is like I think it's long. This is 2022. 2022. Yeah. So that was like a bit of alluding to now. It's a very long-winded way to get here, right? And at the time, I was researching what's next, right? I've learned all these things. I've built 2 businesses. They didn't really work out. I've like tried to work in iFlix, and then from Catcha, you learn so many things about building businesses. Now you understand the nuances of buying, building, investing. what are the things that I think fits me better? And I was trying to figure that out. And someone, one of my friends, so I visited a friend in the UK, and I said, hey, Eric, have you heard of this company, Constellation Software?
Yeah.
Right? I'm like,
This
no.
is 2022.
This is 2022.
Wow.
Right. So, and I'm like, what is this all about?
Yeah.
So my friend works in, I think he works in like a boutique IB. So he has helped someone sell a company to Constellation.
I see.
I was like, go look at it. It's super interesting. Like, I don't think anyone is doing it in Asia. You should like go explore it.
Yeah.
And then at the same time, Patrick actually, hey, Eric, like now we shut our business. What are you gonna do? I'm like, give me some time. Like I just want to fix my body and take a break first.
Yeah.
And then the start is very draining, right? All in like 7 days a week.
Yeah,
right?
yeah,
And I think I needed a break. Let me just buy my PlayStation and play some FIFA and like chill a little bit for a few months. Let me come back to you. And then one day he called me. So at the time I was already researching this idea, right? Like Constellation, what do they do? What's so unique about it? And I liked it because software business is something we understand.
Correct.
Right? Because we're in the digital space.
Yeah.
I like the business model.
Yeah.
But at the same time, I was trying to figure out actually what's angle here, right? If they're not here, there has to be a reason.
Yes.
Right. So then eventually with Patrick and I talked again. Patrick one day called me, hey, I got this Berhad. You want to run this Berhad? I'm like, then the first instinct I gave him is like, wait, are you sure you want a 30-year-old to run the Berhad? And then it's like, no, it's fine. Like the business that we're in, nobody knows how to do it anyway, right? So that's his style, right? And I said, no, like hold your horses, right? Like I have something that I wanted to do. So at the time, the Berhad was already going through the process of injecting iMedia, the digital media business.
Yes,
right?
yes.
At the time, it was a fairly new business, so it was called Rev Asia Berhad.
Correct.
And Rev just sold the operating subsidiary to Media Prima in 2017, and then it became GN2, means like a cash, but it's a shell. You have to do something about it, otherwise you get delisted. And at the time when I was in Catcha, I already kind of help out here and there, right, to find targets, to inject, but we never found anything suitable. And iMedia came along because this was the management that got sold into Media Prima that left. So they finished a contract. They're like, you know what?
This is all the sales.com.
Yes, the OGs.
The OGs.
The management of the OGs.
Yes.
So ZK, Jackie, Brian, and Ken Wei, so the top 4 guys, say, hey, you know what? This is not for us. We want to become an entrepreneur ourselves. So they left and they started like a reselling kind of agency business for the media publishing world. And then one thing led to another. They're like, okay, you know what? I think what we sold Rev too early. Right?
Still got legs. Still got
a lot of things that we could have done, we didn't do. But the social media space or the digital space moves so fast, sometimes it's hard for you to tell at the moment.
Correct.
So they're like, okay, I think there's like a bigger vision that we can do. So we have put together the publisher business. Influencer agency was becoming a thing in like 2022. And you see a lot of out-of-home billboard becoming digital. And then their views that we can build like a highly integrated digital solution online and offline. Right? And there's all these components coming up. So they went to Patrick to raise some money from Patrick because ex-boss, right? And they used it to acquire some businesses and then started building out like a 3.0 version of what they sold to Media Prima. Right? And then the business grew very fast because these guys are super
they're super clued in.
They're super switch on. They know what they're doing. They have all the relationships. They know who are the people to hire. So they're very experienced management. And I already knew them at the time. So actually, funnily, like iMedia, the website and the email, I set it up for them. So the first email is eric@imediaasia.co. And for the longest time, nobody knew who Eric is because you can search on Google, you can find Eric, but there's no Eric in the company. Years later, it became a lot clearer. So I said, hey, you are the Eric. Right? So at the time, like we set up the business together. And the business was growing quite well, and then we thought actually after I think 2 failed acquisitions for Rev, this could be a good business, but it's very young. It's like literally a 2-year-old business doing like 2 million profit at the time. And then Bursa was like, not very sure. But okay.
I'm looking at the numbers. This was 2022-ish, 23-ish, right?
2022 when it was actually approved, right? Like profit guarantee. I can't remember the exact number, but maybe like 3 million and 4 million kind of range lah. We were very confident because these guys know what they're doing. We're quite confident this is a very achievable number. They've done it before. But then obviously we need to provide like Bursa with a bit more confidence. So it takes some time, the due diligence, So when it comes to about 2022, this was the tail end of the regularization plan.
I see.
And then Patrick said, hey, we need someone to run this. Would you be interested? Then I said that to him. Like, are you sure you want me to do it? And then I said, I got something I want to do. But let me come back to you in 2 weeks' time, right?
Okay.
So I kind of distilled all my thoughts. Hey, like Constellation is what I want to do. And it's like, great. I was also researching about this.
Oh, so it's coincidence?
Independently.
I see.
It's very funny, actually. I didn't make this up. I can tell I didn't make this up. And then I was like, okay, let's start digging into it, right? And then eventually we say, hey, you know what? Why not we just combine what you want to do and what this entity is doing, right? And just put it under one roof, right? And then if you're public, you have access to capital.
Correct.
iMedia was already generating good cash, and they'll probably continue to do that. I know he has worked with ZK and Co for like 20 years, and there's a strong relationship there. And I know them, they know me, I know what they're good at, they know what I'm good at. So we eventually pieced together a business plan and say, okay, you know what, we're gonna build out a kind of holding company with iMedia as a main kind of cash generator, and then the HQ will be focusing on allocating capital. At the time, we still didn't know the whole concept of serial acquirer existed, to be fair, right? And then we said, okay, software is going to be pillar 2.
Understand.
All right, today we have 3 pillars, right? We have B2B, expo, and that's kind of an organic evolution of like the research and whatnot. And then one day, Patrick just like turned up and said, hey, Eric, like I saw this conference called Red Eye Serial Acquirer Conference. And I read all the companies and shit, these are all the companies that we should model ourselves after.
Yeah, exactly. The Lifcos, the Rocos, all there, right?
Never knew. Because they are like very quiet. It's a B2B business. But actually we interacted with a lot of them on a day-to-day basis, right? Like Electrolux, the kitchen appliances, very serial acquirer.
Correct.
Asa Abloy is like a lock company.
Yale belongs to them.
They bought companies in Malaysia before. But nobody knows, right? Because it's a very B2B sort of like business. And a lot of them are industrial businesses.
Yes.
So that's where we started, and we were very apprehensive about using the concept of serial acquirer because we worried we could scare people. And then Patrick likes the idea also because it's very true to his way of building businesses in the past. iProperty was like a roll up of like I think 7 property websites.
I see.
iCar is 3 websites in and a few other businesses that's adjacent to it in Thailand, Malaysia, and Indonesia. And he's very familiar with this. Right, at the time, like him and Luke probably have done like maybe 40, 50 M&As, and a lot of them work, also a lot of them don't work, right? So they've collected all this understanding about doing deals in Southeast Asia, the nuances, the pain, the regulation that you have to deal with, the local people, how do you read them? Like
becomes muscle memory already.
Become muscle memory and got burned. I think the most important is it got burned first.
Burn, yes.
Right? you don't get burned. There's a word in Mandarin say 成功是偶然的，失败是必然的。
必然对。
Right. So it's easier to learn from mistake than to learn from success, right? And they have all this muscle built. And I was very keen, right? And then so eventually we pieced together this plan. Okay, this is what we're gonna do. What we underestimated is the amount of compliance and regulatory kind of challenges of doing this as a public company.
I see.
Right, so they did it as like an Australian kind of listco, and the rule is a bit different there.
Yeah,
it's
a bit more
lax,
right?
A bit more lax. They're like, you do first, but don't let me catch you doing
catch
stupid things, right?
And
then I'll go whack you. Here is like you have to ask for permission first before you do anything. And obviously I was very naive, I never run a public company before, and to them it's like can one, right? Entrepreneur mindset is like can one. We jalan first.
Solve the problem later.
Solve the problem.
Promise
right?
first.
Jalan first, right? And last year we were reflecting on some of the things that we did, right? We bought 7 companies.
2 years, right?
In a year, basically. And in total, including iMedia, we probably bought 15, 16 companies by now. The 8 companies would have been done 3 years ago if it's a private company. Yeah. Right? Like, because you don't have to deal with like the EGMs, the public shareholders.
Yes.
But there's obviously also kind of positive of being a public company, right? Then a public company has 2 things, right? One is that you very quickly know whether whatever you're doing people understand or not, because you have a report card every quarter coming out.
Correct.
Investors coming asking you what you do, so you won't get stuck in that little kind of bubble.
Your own silo.
Yeah. And the second is then we can access capital a bit more easily. So it's like trading off like speed for like, I guess, scale in that sense, right? And governance.
Yes.
And that's because of public company, naturally there's a governance standard they have to stick to, and the ease of doing deal compounds over time. And what I mean by that is that whatever deal that we do, all the terms are public. So when I negotiate the vendor's lawyer, he might say, hey, Eric, can we do this term ABC? And I say, okay, AB I can do, C I cannot do. You can refer like to 8 deals that we have done in the past.
That's
so
the template,
domain, I really cannot move, right? So and they know it's real, right? It's not like I'm like
you're faking it,
right? And that's like the slight benefit out of it,
Understand.
So eventually in 2023 I joined with that idea in mind, right? We want to build a holding company and we want to use M&A to supercharge the growth for all the pillars that we have, right? So B2B Expo really came in late 2023 as we researched in the event space through iMedia. We realized, there's a B2B Expo that's a bit different, and then we found good companies and partners we can work with. So that's evolution lah. So the first year was really to get the house in order, right? Put the structure, governance, people in place, scope out the market, build a relationship. 2023 was that lah, getting all the basics done. 2024 was like setting the deal together, putting the deal together.
Put the M&A playbook together.
Yeah, put the M&A playbook together, convince the seller to sell to us, try to tell them we're the best owner ever, and really build out the pipeline. Yeah. And then 2025 was the year where everything comes to realization. Right? So a lot of people think, hey, you bought 8 companies a year, are you going to do that like every single year? The answer is yes and no. Yes, our target is to buy between 3 to 8 companies every single year, but we only buy when we think it's suitable. Right? We don't simply buy because we don't have pressure to deploy capital in many ways, right? Not like a fund. Yeah. But it took years to build the trust, to gain the trust of the seller, and very often we don't buy the whole company. That means that we will continue to work with the seller. And on average, I think now with a calculator, it takes about 23 months to really get a deal done from meeting to actually signing the SPA. Some are longer. Some I know the vendors of 5 years on a personal level, right? Some are a bit faster depending on the situation. Yeah. And it takes time to build up that space. So last year was a very, very, I would say, very pivotal year for us because we've been telling people these are the things we want to do from 2023. Right? A lot of people say, hey, when are you going to do it, right? When you say all these things, like when is it going to happen? And you'll meet investors, interested kind of investors, and say, like, Eric, you said you're going to do this. When are you going to do that? Yeah. And it's a bit of like wait and see, right? And you always big grand plan. Are you going to actually do that? Yeah. And last year was the year that we tell people, see, like it's all lined up, boom, 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 right? And it took a lot of work. And some people say, hey, like, what if someone with like more well-funded computer come in and try to do what you do? Actually, we're not so worried. And the reason is because it took us so many years to build that relationship and having a team that actually knows what we're doing. I think that's a bit underrated, actually, right?
Because it's very hard to quantify. That's the thing, you know. There's no and that quantifiable measure is only done after a few years. You're right. So it's very hard for people to wrap their head around. And I was reflecting on this, like, when I was 23 years old, I joined Patrick. The whole concept M&A to me also is like alien,
box, right?
Yeah.
I had the experience like, are they doing business or are they just buying companies, right? And I totally empathize because I was them once.
Yes, right? Yes.
And now I'm on the other side, right? I have to educate people like what we're doing and why this works. And a lot of people say, hey, you simply buy one. Yeah. And I'm like, no, dude, like one company that we buy, we have met 98 companies. I can show you the whole funnel.
So that's why I want to double click. And I we're just so engrossed. I just want to make sure that the audience are following up on speed. So let's go back, right? Maybe to the audience, just to set the context right. What is a serial acquirer? Maybe what is a serial acquirer? Explain it in a very concise manner, and then we talk about the nuances of the funnel. Because you and I, we've had these many conversations about, like, Mark Leonard actually said, you want to compete with me, very simple. It's a phone book and a phone. Right? It's the famous Mark Leonard's words, right? Right? But you just kind of hinted that it's not, and maybe you can take a step back and explain to people that kind of funnel. Why M&A rather than organic? And then what is a typical M&A playbook? Yeah.
So I think maybe I start with what we are not, right?
Yeah.
And then I go into what we are.
Yeah.
What we are not is just buying profit for the sake of buying profit. What we are not is doing M&A in organic growth and not doing any organic growth. So these are two things I think misconception that people, and I think maybe it's us not doing a very good job in explaining that, to be fair.
Yeah.
So what we are is like a breed of companies called serial acquirer, like in the West. And to sum it up, we are a company that pursue systematic and programmatic acquisitions to complement the organic growth of the businesses. And the reason why we do that is that a lot of businesses that we own generate cash. And when you generate cash, you need to figure out what to do with the cash. And we see there's a lot of opportunity, at least right now, in the near 3 to 5 years, to deploy in the form of M&A to help grow the business that we acquire and to help grow the business that we already own. And the secondary impact that I've learned over time is that there are a lot of good SME businesses that generate good cash flow, but we can do a lot to make them great.
So they're like, okay, but you can scale it up on another level.
You're right. Yeah. And that's something that I learned over time also, right? As you start working with a lot of them, you realize actually what we can do is way more than just acquiring them and try to commercialize and grow the business. I'll give you some example. One thing that we have seen over time is that how do you know when to hire someone? It sounds like a very simple question, but actually for a lot of SMEs, they don't think about it in a very structured manner, right?
They don't have like a complete HR policy, man.
Yeah. So they be like, so we had an example, one of our companies a few months ago. I said, Eric, like, I want to hire someone to grow a business, but at the same time, it's going to eat a lot of profit, right? And I said, yeah, fair point. How do you used to decide that, right? And they say, oh, last time, gut feel lah. And the last time I got no partner, if I make a wrong decision, it's fine. It's my problem, right? Now I got a partner, so I can't do that anymore. But the deeper problem is it comes from the fact that they don't have a view of the business, how they're going to do in a year or 2 or 3 years, right? Meaning you don't really have a sense of how they forecast my revenue, right? And then you work backwards. Okay, roughly I think I'm going to do X amount of revenue, X amount of profit this year. What's like the amount of revenue or profit I can reinvest into hiring someone or into like buying equipment and whatnot. And these are maybe for someone very sophisticated like you, it's very straightforward, right? Why do you even need to think about it, right? But for a lot of SMEs, they were not educated in that sense, right? A lot of them
they don't have the framework.
They don't have the framework. They don't think about it this way, and we think these are like small little tweaks that we can actually educate. That's one. Two is like benchmark, right? Nobody knows whether they are top of the line or not, but we know because it's everyone in the industry,
correct.
And we only work with the best, right? And as an example, a typical media business, like what's like the gross margin that you should be targeting, what's the OPEX that you should be targeting, expo business, how much should you spend on procurement, and then because we've seen all that, not only can we give them the benefit of benchmark and say, hey, where you stand, right? We want to get you to the top. And also two, we can actually tell them who to talk to, right? Say, hey, like this company is working with vendor A, and this vendor A's price. Can you have a look to see if like this is something that you can work with and it fits your requirement and your standard and whatnot? And we just open door and connect them. So these are quite tangible financial benefit, right? Beyond all these typical synergies that you talk about, I can cross-sell and whatnot. These are quite straightforward. But these are nuances that people don't talk about like from the outside. They don't understand, we are a strategic partner. What do you mean by strategic partner, right?
Very big word, but...
these are some of the examples, and we try to focus on a few small things that can really unlock the business. Another very famous topic is price increase. Right, this is the biggest nightmare for SME owner.
Correct.
And there are a few reasons. One, a lot of them, their customers are like their friends, right? So they're very worried lah. If I go raise the price, the customer don't like me, they walk away. These are my friends. And then two is, if they were 100% of the owner of the business, the risk is all on them.
Correct.
If I increase the price, don't work out, the whole business collapse, it's all on them, right? So now with us coming in as a partner, they have a bit of a kind of, I guess, de-risk already. That's one. Two, that then we can educate them, hey, what is the right pricing strategy and how do you execute it? Actually, raising price is one thing. How do you execute the price increase is a completely different skill set altogether.
Correct.
And why you should be worried and what are the things that you shouldn't be worried. And then obviously we need to combine it with their kind of on-ground insights in the relationship with the customers or their understanding of the customer pattern to really come out with a plan to increase price over time. I think these are what the Americans are very good at, right? Like they know how to think about it. They know how to do it in a way that doesn't like jeopardize the relationship, but at the same time like customer understand. No cost goes up, right? And a good business should be able to raise price above inflation over time, right? Otherwise the business naturally just decline on
because
real terms,
inflation will eat away.
So those are small things that now they have a partner that can work with them on how to do it and what to do and why they should do it, and then they can contribute from their kind of on-ground insights, right? So these are some simple small thing like increase price in a sensible manner, hiring people, like how do you decide when to invest certain costs, and this time I mentioned the benchmarking,
industry benchmarking.
These are all small things that has huge value.
Absolutely.
And these are some of the things that we focus on, right? Like so the monthly board meeting as an example, you really focus on three things. So financials, where you are, where you think you're gonna go, and do we need to be worried? Right? so most months is fine, right? Months is fine. And then some months that, okay, we didn't hit the number, and then the forecast is a bit worrying. Then we need to talk, right? Then the meeting becomes like 2 hours. Otherwise, it's a 15 minutes check-in, right?
Understand.
Second is, are there any new ideas that you're exploring? And the reason why we want to do that is so that we know we can connect them with other companies that is doing like related ideas. Right?
Yes.
Hey, you can go talk to those guys, right? And then three is what's the sales pipeline? So we have a view of like what are the customers out there, and then because we see that at HQ we have a broader view of who is doing what.
Correct.
And then there may be some relationships or introduction that can be helpful. Then we can say, okay, you know what, like we can get CEO A to connect you. So those are like the very high leverage things that we think is useful.
Understand.
And now we are at a phase where we are scaling the companies, right? So we bought in companies. Today our staff count probably between 270 to 300 people. And it will continue to grow, right? And one of the things that I've started noticing, this is also me just trying to make sure things don't break, right? Is that as we scale the headcount, the complexity of communication becomes like a lot more complex, right? And that's one. Two is that how do you then set up an environment that allows the opco CEOs and also underneath all the businesses, the people to make quick decisions.
Correct.
Right, because you can't rely on like everything goes up, right?
Every day, Eric, make a decision. Eric, make a decision. Cannot be.
And I will be very busy. But more importantly is that that's not the best way to run business.
Correct.
Right? You want to empower people to be able to make judgment, right? And one of the things that we think is very important is for people to have say and autonomy on what they do.
It gives them sense of satisfaction too.
You're right.
Yeah.
You're right.
Yeah.
So one of the things that we're doing very actively right now is to educate all our companies to build their own culture, right? So these are like, if you take a more American example, or even Chinese, like Huawei has like got their whole principle. Yeah. Amazon has got their own principle. You go to Pixar has got their own style. Yeah. Netflix has got their own.
Even this boring guy, Amphenol, 150 GMs empowered to do M&A on their own, you know. Can you imagine? I think in Asian culture, that's unheard of, you know. Your GMs going to make M&A acquisitions.
You're right. So that's why when we explain what we do, they're like, hey, do you, like, who decides what to buy and like what's the process in Catcha? Yeah. And then when I explain to them, actually it's very like bottoms up, right? Yeah. We have like rules and like key KPIs in place. Yes. Anyone wants to bring a deal, just bring, as long as you fit those criteria, right? Yes, and then at the board level, it's just a yes or no. Yeah. And then by the time it goes up, it's already all the process, like a done already. Yeah, 10-page memo is already there, and then you go to the IC meeting, it's just to debate whether this is a good or terrible idea, and make sure that we cover all the bases. Yes. And to them, to a lot of investors in Malaysia, I find it's a bit counterintuitive because there's this whole hero mentality, right?
That's right.
Like there is like this one guy that makes all the call, and this is very traditional kind of thinking, right? You can recognize like a lot of like big tycoons in Malaysia. I call the shot. Yeah,
the Tan Sri's call the shot. I have eaten more salt than you have eaten more rice, kind of thing.
You probably have met a lot more of them than me, right? And I think there's a place for this sort of leadership, right?
Correct.
Because you need, like, it's a bit like Singapore as an example. Like Lee Kuan Yew is like what do they call it, the benefactor dictatorship kind of style. Yes. But if you do it right, you go very fast.
Correct.
Right? And it fits for a certain kind of business model where you require that, right? But in our environment, it's a bit different, right? Our philosophy is they want to empower people to do work and decide for themselves. Yeah. And then we come in as more like kind of make sure that people don't do crazy stuff. And then wherever we think we can unlock growth, we help them out. And then it's like the culture point is where I'm spending a bit more time this year, as we have a good foundation. Last year we did quite a lot of good deals, financing all sorted out. And now it's how we scale the organization to make sure that everyone knows the expected behaviors in the environment that we operate in.
Understand.
So that I can do less work and the team can do more, right?
Yeah.
And I think that's what we're trying to do, like decentralize the actual execution of the work and make it very clear, okay, here are the principles, right? And if you think about it, it's like countries has got constitution, right? This is a similar, internally we call it the operating constitution, right? So in the HQ team, 6 of us, very clearly, this is the 15 behaviors that we expect, right? The 5 core culture code. So they very clearly know, okay, like now, here is what is expected of me. Again, we don't expect people to follow 100% of the time because it's not natural. But that's the standard that we set, right? So every time we sleep, even they can come to and say, Eric, like, we all promise to do this, right? But you're not doing this, right? So how do we get back on track, right? It has to be quite productive and then professional, and everyone don't take things personally. And that's why it's very counterintuitive, like to a lot of investors that are very used to the one chairman that drives it all, right? And Patrick, he's involved, right? But he only cares about mainly 2 things. Don't buy stupid companies, right? And make sure they deliver. Right? And I think that's a very simple way. People will say, hey, why your chairman so free? No. These are 2 most important things.
The nuance in getting the stupid, that word stupid, right? It's a lot of connotation to it, you know. Business model correct, right management culture. And
that's the key things, right? Which also makes things, we try to simplify our management approach, right? So the team knows exactly what is expected. And we try to refine it as we go.
Understand.
That's kind of how we operate these days.
Okay, so I think one key thing I really want to highlight is like how's the funnel like? Because you see, a lot of times people say, my 公司 go SSM, download data, okay, can go and buy, right? But it links to your point about benchmarking because, and also links to the point of what Patrick said, don't buy stupid company. But how do you know whether it's a smart company or a stupid company? So kindly describe that process so that for the audience who are unfamiliar with like an acquisition process, how does it, what's the top of the funnel? You know, what do you guys do? Is this really just a phone and a phone book, you know, kind of thing, right?
So maybe I start with a more high level abstract version of how we typically approach a mandate first. So it's always starting from good industry that has like long-term prospect.
How do you find that?
Okay. So good industry is that we need to have a view of like the next 10, 20 years, how the world is going to look like. Sounds simple, but it's actually quite nuanced, right? So you understand consumer behavior because it drives everything.
Yeah.
Right. Consumer behavior drives, even if you buy B2B companies, it's like a function of a consumer behavior.
Correct.
Have a view on those sectors that will continue to be relevant in the longer term, right? So you might see as a media will always be relevant.
How do you check in on that? Every 3 months, every 6 months, once a year offsite?
Every day.
Oh, so if you see a trend, then you say, "Hey guys, we better watch out for this," right?
And that's one, right? So what are the top sectors out there? So first thing is like we need to figure out what we're good at first, lah. So we focus on media, expo, software. Because those are things that we understand quite well.
Because that's the composition of your team.
Right? Like this is like a history of Catcha, Patrick, myself, and all the whole team.
Okay.
And also things that we're more interested in, right? So we're better at, we understand a bit better. We are more interested in it. And then using that lens to look at different industries out there and see how do we play, right? And just now you mentioned like much like a lot of, I guess, long-term investors, you want to look at the prospect of that industry. Is it a sunset or like a growth industry? So as an example, let's just even take B2B expo, right? We've seen printing expo, but printing is like a declining industry, right? So then how do we determine then it's like, okay, then we won't go into that. So on a macro level, is this a good industry? And then within the industry, there's always supply chain, right? So even in the software business, we look at the big, because to find a meaningful business, you need a big market.
Correct.
Right? A big market is like banking, agriculture, real estate, etc., car. And then within that, what's the supply chain? So if you look at banking software, there's a whole chain of loan origination all the way to core banking, right?
Correct. Even payment and all that.
So there's like many nuances, and then we need to understand the nuances of all these supply chain, who are the players in place, and then scope out who are doing what. Right? Then we get a sense, okay, where do we want to play now, right? This is a part that we like, right? Because I think it's going to be relevant. And in the banking software, what we like is typically why it's regulated. It's compliance tool. It's a must-have, right? Not a nice to have.
Correct.
Especially in the environment where now anyone can build anything very quickly.
Correct.
So we want to play in the environment where there are structural factors that will allow this business to continue to be relevant. So that's kind of where we start. Right? What's the high-level macro landscape of this particular industry? And then step 2 is to understand the supply chain and understand who are the players doing what. And then step 3 is to figure out how do we talk to all of them. Right? So that's where you build the funnel at the top, right? So then the thousands of companies that we have, it typically starts from that, right? Someone has a thesis, right? Okay, I think within this space, here are the idea, and then the research, and okay, let's start talking to people. And we try to start talking to people as fast as we can. Right? Because we don't want to spend so much time like doing desktop research and then drink our own Kool-Aid and then shock the theory, right?
And then you realize, I missed this. There's a blind spot. Yeah.
so like what just now you mentioned, do you believe in conversational learning? That's pretty much our day-to-day, right? Our job is to go meet people, talk to them, educate ourselves and learn. Right? So the learning is like a big thing in the team, right? Because we have been operating in an industry that moves quite fast, right? So we have a view that things don't stay constant, right? So we really need to make sure that we're on top of the trend and like behavior changes. So we try to speak to people as soon as like we're ready. Okay, this is something we look at. Let's just say 100% is where you feel 100% comfortable that I'm not going to go into. We start talking to people within at 30-40%. Right? So we have a high level understanding.
Okay.
And then the thing that we need to train the team is that don't worry if you look a bit stupid. But let's just go talk to people first, right? And obviously you want not be a waste of people's time, right? You need to do your research before you.
Don't go there empty-handed. Don't even know.
Right. So start talking to people and that will really ramp up the learning massively, right? So they will then be able to tell us who are the competitors out there, what's the supply chain nuances.
How do you get the trust for them to tell you that?
So this is a trick, this one trade secret. I'm kidding. I'm kidding. What I think we try to do is to share first.
I see.
We open up ourselves first.
I see.
And be in some ways vulnerable and be very honest. Like
so maybe you share your research. You say, hey, this is what I found. Correct me if I'm wrong.
And then try to find ways to add value.
I see.
There's two things, right? How do we open up ourselves and gain trust is like by telling people that I'm opening up to you.
Yeah.
Right. So you can trust me, right?
Okay.
I tell you all the vulnerabilities, all the I guess the trauma and the challenges that I have.
Yeah.
So they know we're not there to just like dig from them. We open up our book first. Right?
Understand.
And then two is try to figure out before we go to a meeting what are certain things that we can offer. Right. And we have the benefit of knowing a lot of people. So there tend to be some kind of things that we can help people out with. And three is that also a lot of companies, they also want to learn about what we do. So we have the benefit, we make our intentions quite clear. Like this is what we do, we acquire businesses and this is our strategy. We like to learn a little bit more and then we'll love to introduce ourselves to you. And they also, a lot of them are quite curious.
I see.
Yeah, about what we do also.
I understand.
So that also helps quite a bit.
So normally, what does the top of funnel look like, and at the end maybe mid, and then what's the end normally? What is a 10 like a clinical trial? Only 10% of drugs come through, or how? Give me the numbers.
So at the moment, we probably have got we actively track maybe between 5,500 to 6,000 companies.
Okay, regional or Malaysian?
Regional, but I would say now about 75% Malaysia, 25% regional.
Okay.
About those, I think we probably, don't quote me but probably we've met close to 1,001 or 1,002 companies. And we probably have done 15 deals to date in the last 5 years. So that's like gives you a sense of the conversion. So it's like slightly more than 1%.
Yeah, slightly more than.
If you look at the history of the companies.
Correct.
And that's just the nature of it.
Yes.
Like some people ask, hey, 你在买菜 right? Buy vegetable in a pasar, right?
这个2毛钱，这个2毛半。
No. We got a full team of M&A people, right? And then something that people don't appreciate. We got like a dedicated M&A team sitting at HQ. And 80% of the time is to go meet people to figure out whether we can buy companies, convince people to buy, analyze them, negotiate, execute the deal. And then after the deal, make sure that they sit on the board, make sure they deliver so that our HQ CEOs don't worry about the deal making side.
Correct.
And the reason why we want to design it that way is such that the CEOs can focus on generating profit and revenue for the business and don't get bogged down by the deal making. And it's actually a very complicated process to get someone to meet you, gain trust, and like all the way to signing. And we involve the CEOs along the way.
I see.
To make sure where there's synergies, conversation required, they're involved. Or sometimes it's a tough conversation that you require two industry operators to actually speak the same language. Then we put them together and say, like, so for example, I told ZK, like, we have got this like blocker that we need to go through with this owner. Can you come with us to this meeting and then share your thoughts and then kind of move the relationship forward? And because it's important for them to build a relationship, because they don't kind of work together. So we need to kind of strategically bring them in such that it will be beneficial to our CEOs when the business come together, but at the same time it doesn't take up too much of his time also. And time is a fine balance, right? We always have to be very mindful of.
Correct.
And internally it's a big thing. We try to make sure that we don't waste time, right? So when we tell people our board meeting 90 minutes, boom, like some people say, hey, so short one your board meeting. My board meeting is a whole morning. Right? I'm like, no, like we want to just make sure on like very important stuff we get discussed. And people read all the materials and come in to discuss, not to look at the presentation.
Not to
look at. And we had like time where, and we are quite open in the feedback internally. There are times where the meeting got dragged on for 1 hour, and then I go to think to understand that we had to do that, but like, can we tweak certain things so that in the future we don't run into this, because then it's a bad reflection of us to the partner. And then we have to move all our meetings later on for but those are refinement process over time. But the conversion, it's about there. The teams spend a lot of time meeting companies, nurturing relationship, build trust, share what we can do to help them, and build that track record of like being able to deliver what we say we're going to deliver. And trust, like the famous Warren Buffett, right? It's very easy to build. Reputation takes like forever to build, but very easy to ruin.
5 minutes to destroy.
All you need is someone that whack you, and it doesn't matter whether it's real or not in these days. There's this funny saying internally, we say perception is reality. Right? Like you need to manage perception because that's how people perceive as reality in today's world, right? So
social media.
We need to be very conscious of that. As much as we say, hey, you just be yourself, but at the same time, you need to be conscious that you need to look at outside in, right?
Correct.
It's not like you say the right thing, people will say that we need to manage that. So that's like underappreciated nuances where you actually need a full team of people, a process, like investment process that can scale, and very clear strategy. But you also allow for like some pivots in the process. Right? So we tell our team, hey, here are the pillars, but if you find things that doesn't make sense, please just erase it, right? Or if you learn anything new about a certain industry or nuances, hey, please share it with us so everybody gets like brought up to speed. And sometimes you might learn about it, you might think you know the business at the time of doing the deals, but reality is that
it can evolve, you know?
Yeah, 60-70% you know, and there may be some nuances that you never really appreciated until you sit in and start driving the business. It's like, hey, why certain numbers doesn't make sense? And then you dig deeper, and then that's where the remaining 30-40% comes in after the acquisition.
I see.
Right? This might be a bit unnerving for investors to hear that,
correct,
right? But it's quite common.
Yeah,
right?
it's part of the growing pains.
Yeah, it's a bit like you invest in a public company, right? Today,
exactly.
you know 60-70% of the time, and then once your money is in, your skin is in the game, then you start to dig deeper, and then, okay, these are some nuances. Then the question is, how do you then evolve, right? So what we're going to get to a stage is that we have enough conviction that we won't mess up, right? In the absolute worst case scenario, we are fine.
Yeah.
Right? So leave the 30-40% to be like the part where there's a margin of error.
Yes.
Right? So that's typically how we think about it.
Okay. Yeah. So I think I'm going to double click on the part where you said that you focus on these 3 key pillars because it's the composition of the team. But would it be fair for me to also assume that these 3 businesses had certain characteristics about their model? And maybe can you go into... I want to dig very deep into the expo one because there's something new, but maybe start off with the media one and then the software and that. So maybe start off with media. What are the characteristics?
Media is a business we like because it's high operating leverage, and this can cut both ways. Right? The revenue drop like you kena already, but also the marginal cost of onboarding new customers and producing new content
is straight to bottom line.
Straight to the bottom line. So we love that. But with that kind of business, you need management that is very experienced and can manage the pivots or like certain changes in the industry or where the customer is going.
How has it been 20 years ago, media, and then 20 years today? Because it's like very linear, traditional media, and today is this. Maybe you can educate us a bit about that nuance.
Yeah, I think ultimately what the advertisers want remains the same. They want attention, they want reach, they want to be able to engage with the end customer.
Okay.
Right. What has changed is how do you do that, right? So maybe many years ago it's cable TV. So if you read literature from the 80s, right, people will be worried about TV screen time.
Correct.
Today nobody talks about TV screen time for their kids as a problem anymore. Yeah. It's a lot of this is mobile. Like, yes, still some, but mostly it's mobile.
Yes.
So you see like history doesn't repeat, but it rhymes in that context.
Yeah.
And then when radio came out, it was like another problem where people just want to listen to radio. When newspaper came out, everybody reads newspaper. Media is saying that nobody's going to work.
Yeah.
The same thing will happen over and over again. So the fundamental similarity is that advertisers wants to reach customers at the most direct and efficient way to do it. The question is that how do we then provide that and make sure we evolve our model towards that? So you take 20-year lens. Those days was like maybe TV moving into newspaper or like all those guys like classifieds gradually get moved online. So then there's the advent of like iProperty. Like,
correct.
So one page of the newspaper is a whole gazillion business model that you build, right? And then you got like video on demand that replaces TV.
Yes.
And then you got social media that came in that pretty much kind of disrupt quite like the distribution of medium, of news or content. What we need to do is to make sure that with this new, I guess, paradigm shift, we stay ahead of the curve and make sure that we tweak our business model to continue to be relevant, right?
I see.
And the core principle is the same. Customer wants to reach advertisers. How do we get them to do that? At the same time, protect our margin as a business and be placed in a supply chain that you can have power to not compete in price. I think that's the nuances that we like in the digital media business, and it's highly scalable. And then the experience I think matters quite a bit, and having the DNA to be able to tweak, right? So even in Catcha, so Catcha Digital was listed as Catcha Media Berhad. Those is a magazine business. Eventually, we merged with SAYS and it became a digital media business. And then we sold, and now we started this. Then social becomes a social media influencer, become a thing. Digital viewer become a thing. So how do we incorporate all that and then cater to the customer demand?
do you think there is cultural nuances in regions where you operate? Let's say if it's Thailand, if it's in Malaysia, if it's in Singapore, do people consume media differently?
Definitely.
Yeah.
100%.
Yeah.
So our digital media business, the strategy we take that buy and build, where we buy independent businesses at subscale and try to aggregate them and then sell it as a package, very difficult to work in single language countries. So these are Singapore, Thailand, Indonesia and whatnot. Because of the structure of the industry is such that in Malaysia, as an example, about 60% of our clients are agencies. So these are WPP, IPG of the world, right? So they hold the purse of the client. And in Malaysia, it's very difficult for them to talk to independent media houses because you got English, you got Malay, you got Chinese, and like in Malaysia, it's very unique. Like maybe 50% of people consume content in English lah, and then 70% in Malay lah, and then 20% Chinese, and then you got overlaps and all.
Understand.
Right, so it's very mafan one, right? You think about it.
Fragmented lah.
Very fragmented. So there's value for an aggregator like us to put everything under one roof.
I see.
And then cross-sell it, right? So it's a model that I think it's quite unique in
for Malaysia lah.
Right? So if you ask us to bring this to, say, Thailand, we don't have that same level of confidence, right? So we don't try to pretend that we go there, launch a new website and say, hey, we are like now a multi-country business. We don't want to waste time, right? Like, we know it's not going to work. And then there are many media people that will find out their hard way, but we've seen it happening so many times. Right? You go plant flag and then you're like, okay, I just burn $1 million and doing nothing there. Say we go to Indonesia, single language country. You go to Vietnam, same single language country. Singapore, multilingual, but mostly predominantly English.
Yes.
Philippines is like a bit of in between. You get Tagalog and English, but it's a market that is historically quite difficult to monetize in media because the income per capita is quite low.
I see.
So we try to avoid as well. But things change over time, right? I
Understand.
think we're looking at some opportunities around the region that we think we may be able to go in a low risk manner and kind of try to dabble our way into it. The positive thing about us is that we got a very efficient cost structure in Malaysia. We have got depth of experience of running, like navigating the nuances. But at the same time, I think we need to remain humble to know that, hey, like every market is a bit different. So we're very conscious of that.
Understand.
So it's very different.
Okay, so now software was by way of competence or by way of you studying the industry, you realize that, because even software, you've got horizontal market software and vertical market software, in which Constellation is, right? There's a lot of listed software companies in Malaysia, and they don't do it very well, actually, sad to say. But what makes it different in the private markets and what makes it different from where you are operating, maybe?
So when we first started out, we were inspired by Constellation software. So very much vertical market software. And we were inspired because the model of the way they operate, right? To them, it's a math. It's a mathematical questions, right?
Yes.
Like how many I buy at what rate, and I got this whole playbook. I buy 3 times ARR. I go in and I implement a bunch of like cost efficiency or revenue idea, increase price, and then I'll get to like optimal margins, right?
Yes.
Fascinating model. Then the next question we ask ourselves, okay, one, do we have similar market structure in the market that we operate in, right? Do we have the depth of companies that no longer grow, that you can buy very cheap and implement all these best practices? That's one. And then 2 is that, do we know if we are the right people to do it? Right? So to answer your question, the second point, actually, it's a mixture of we like the industry and we also think actually this is a model that we understand very well, because while you look at, say, a business like iProperty, it's a marketplace business, there's a very strong subscription component to it, right? Because agents or advertisers will buy credit, and then you need to think about how do we get them to buy more credit, how do you adjust the price, how do you lock them in, how do you create like switching costs? And that those like principles are quite similar.
I see.
The only difference is that the reason why customers stay with you on iProperty versus stay with you in the software is slightly different, right? So it's a one-to-one relationship. So software, I'm a vendor, I provide you with a tool, you appreciate it, you get locked in, all your whole life is in it. Very hard for you to switch.
Like a SAP. Once you're in, that's it, man.
The value that they get is through that, right? In the property classified business or marketplace business, the value that they get is the fact that they can reach out to whoever, like the customers that they target, right? So in the case of iProperty, agents wants to find leads from the customer. So the value is that the lock-in is the network effect.
I see.
Right. So that's the slight nuance when it comes to why customer find value, but the principle is quite similar. Right? It's digital, very high operating leverage. You invest to build out like the software or the initial core, and then how you scale it. It's all like money down to your bottom line. So that's a characteristic that we like, and it's something that I don't think many market player or investors have that muscle to do in Southeast Asia, especially. Not many. I don't think. We're joking, like, can we hire like a CEO to run this whole thing? I don't think we can find anyone in Asia.
Yeah. Because that skill set is very unique.
Here, right?
So unique.
It doesn't exist here. Which creates a good and a bad problem for us. So that's why we went into it, and we like the vertical market software. Even before AI came along, I think we always liked that, because if those days the reason is a bit different. One is we want to find companies that's big enough for us to acquire and be meaningful contribution.
You don't want to buy a 1 million top line company, right?
Yeah. But at the same time, it's not so big that VCs will come in and compete with you, or PE will come in and say, I'm going to buy and like list this business. Right?
Where do you think the PE threshold will be? Bottom part, 100 million, 200 million
profit wise, maybe you will start to see PE maybe 8 million, 10 million.
8 million, 10 million.
The lower mid-market guys will already come in.
Okay.
But there's also not a lot of them in the software market. So PE can't really do that. If they don't have like a pipeline of like 100 companies, there's no way they can have a mandate and convince LP to let them deploy. Right?
Correct.
So it has to be a meaningful market, like retail as an example. Cradle would do retail, and it's like gazillion companies, right? And then they can write big checks, and there's big outcome, and the math works for like private equity fund. So we need to find a segment where it works for our model, where PE won't come in because there's no scale. VCs won't come in because the market size are capped. And VMS fits that, right? Because yes, you may have all the banks as your customers in town, but you maybe at your best, you're a 100 million revenue business. Doesn't work for VCs, doesn't work for PE. But for us, perfectly fine. You're profitable, we love it. Right? And then we continue to innovate, like gradually, slow and steady, you grow like 15-20% a year from new customer, price increase, and just better operations. Then it fits into our model. So we also have to find that, like, the triangle of what we are good at, what we like, and then what fits a model that has minimal competition.
Almost like a ikigai.
a little bit, right? It's a Venn diagram of that, right? And we need to be very conscious of that, because if it doesn't fit all these things, it doesn't work. We might love it, we might be good at it, but like if we can't compete against like another investors, that's no point, right? So that also informs like the way we think about the software space. So the main difference between our software market and say where consolidation focus in the developed market is that a lot of the software guys that we look at grows between 15 to 40% a year. Small, right? Like maybe they do 2 million profit, 3-4 million profit. But a lot of the guys that Constellation sees are like what we call like retirement home, right? Like they don't really grow anymore, right? 3, 4, 5%.
Single digit kind of growth lah.
And because of that, the approach has to be a bit different. So they could buy the whole thing and they know exactly what to do, right? Because the growth does not come from the market anymore, because the market already tapped out. So we had to tweak our strategy. Initially, we thought, hey, we will buy 100%. Now we say, hey, actually, we can partner with entrepreneur. They're still growing the business. They understand that they don't want to build a VC-backed business. They LP is not going to talk to them. And we become a partner to grow the business and take it to the next level. So that's kind of, we evolve our thesis a little bit over the last 3 years based on what we have learned, the market structure, and then viability of a certain model. And that's how kind of where we are. And that has obviously changed a little bit. So today, horizontal software used to be very hot because huge market, right?
Correct.
Everybody can use it. But it doesn't fit our model because of that, right? It's too big, it's going to come in and whatnot. But today they have a different challenge of AI coming in and build. And then it's evolved. Like even when we look at VMS today, what we like are the ones that has compliance component to it. Right? So meaning, like banking, for example, if something goes wrong, bank can come slap you, right?
Nicely.
And you can get fined, and there's an enterprise element to it. So you rarely find SME software will be quite in danger to be replaced. And we spoke to some of the customers, right? The other way we sold to SP Setia as a usage of our Outperform CRM business. It's like an AI-led CRM, like, and any consumer businesses that has a lot of leads to deal with, real estate, car, retail businesses, all would use us. Their view is the same. I asked, why don't you just build yourself? Like, I had a very open conversation with the CIO. Why don't you just build yourself? And he said something that, and I was also trying to learn, right? Because AI just keep evolving. I say there's a 2 problem. One is an incentive problem. 2 is a skills problem, right? Incentive problem is that, hey, the board, no one wants to be responsible to make the decision to say, we're going to move from an enterprise software to build yourself. if something goes wrong, all of us are salaried employees. These are big companies.
Yes.
Why would anyone wants to take that risk?
CTO will be fired, man.
Right. So it's a bit like I'm just trying not to get fired. Like why not take so much risk?
Yeah.
So there's an incentive problem. But two more important is that people might say, hey, I can build my own software, but people don't think about the best software engineers that will continue to work in software companies wants to work in a technology company, not a real estate company, and build their internal software. Right? So then you always get a second tier developer, and then you have to deal with that. And you might as well then focus on what makes your beer good, like what Jeff Bezos says, right? Like I focus on my real estate business, which is build good houses or development for consumers, and then everything else I rely on partners to do it. Right. And if you're an enterprise company, you can afford to do that. Right? You're huge size, you've got budget, you can do it. So hence, like we're still very, very bullish about software companies that serve a particular industries that has regulatory component to it, and they focus on enterprise client, right? So not SMEs.
Do you see new upstarts trying to build this, or do you think that the barriers of entry has already been built because of that kind of industry? What do you see here, actually?
Specifically, at least the businesses that we see, and we're quite comfortable with like our strategy right now, is because there's value to the trust that you have built with your client over time, enterprise client, right? So every time, there's a joke, right? No one ever get fired for hiring Microsoft
or IBM for that
IBM, right? Like because you know they are reliable, right? They may not be the best tool out there, but they have the track record of trust, and it's easy to convince your board of directors. Let's go with SAP, right? The price of all these guys are almost the same already. SAP, you go to like
Oracle,
all about the same one. And for an upstart to come in, it's actually not the product itself. It's a distribution channel you already own with your customers. They've built the product alongside with you. You know them very well. They're very comfortable. They know you can deliver what they need. And then the fear, right? Sometimes internally we have this thought experiment, right? So one of our directors look at us. Let's play a game. Today, if I give you $30 million to destroy one of our business, how would you do it? Right? So it's not so much on the outcome, right? But the thought process of what would break our businesses. And want to know that's fundamentally something that cannot be broken by money.
Understand.
Right? If you got money, then the same argument can be used for every business. You can undercut prices, right? But then how do you undercut trust? And you might need to go into a very vicious kind of behavior where, okay, now I'm going to go launch a smear campaign on the company. Right? But nobody will actually do that, right? Unless you're like personal vengeance.
Yes, a vendetta lah.
And it's like there's no rational economic person who would do that. And that's how we like to think about, especially in the software space, right? Enterprise focus, industry focus, and build deep.
Very deep.
Right? Very build deep, right? So there's also all this discussion around, hey, should we go to other industry? No. Like we focus on real estate. We be the best of that, right? We build domain in it because then people rely on us to come in, especially in today's world. It's very easy to acquire surface level knowledge, but it's very hard to go very deep, understand the nuances of an industry and continue to build relevance. And the deeper you build, the harder it is for the customers to leave you.
Understand. Is that pool big enough? I mean, out of the 5,000, 6,000 that you've seen, but now you have to narrow it down, let's say just to software, right? Is the pool big enough? And what is the incentive for these guys to sell? Because if they are founder, maybe if they're in the 60s, okay, I understand. All right, they may children want to take over and that kind of thing. But if they're in the 40s, early 40s or whatever, you Patrick actually said, right, he may have sold too early, right? Right. So how do you find that balance in trying to find, okay, the founder's enthusiastic, but now I'm coming in as a partner to help you grow.
I think there's typically a few reasons why they would consider us. I think the most obvious one is typically a lot of these founders are 40s plus.
Okay.
They want to take some money off the table, right? And these are, there are not, to be fair, there are not a lot of viable options out there, right? Because the business is not big enough that you can go IPO. You can't really leverage up your shares because it's like a SME business.
Yes.
So they want to take some money off the table so that they juggle their kids, their parents, they don't worry about money, so they take on a little bit more risk in the business. That's a very financially driven business, right? The decision. And then a few other reasons that sometimes is some of these three lah. So one is once they do that, they want a partner that can help their business, but they don't want a partner to change their business.
Right. Got you.
Right. So we can come in and we make it very clear. We have no interest to impose any new practice or that it's not necessary to you, and we make it very clear what are things that we don't need to change your brand. Keep your brand, keep your legacy, keep your staff. And we only come in when we're comfortable with all these things. Right? So they like that, right? It's like I want a partner, I can take some money off the table, and then I don't worry about them coming in and telling me what to do. That's one. Two is so there's a more cultural aspect. And then two is some of the value add that they like. So for example, the B2B trade expo business, Roger, he wanted to scale, or even iMedia, right? He wanted to scale and through M&A, but it requires capital and expertise. Both of which is not easy to come at. You might be able to get people to lend you some money, but to buy 8 companies in a year, you do need to know what you're doing. And we can offer that. Say, okay, if you want to roll up or you want to do buy and build, we can do it with you. And then we have the balance sheet to get behind your plan, right? And we make it very clear, it's your plan and we are playing support, right? And you need to really own that plan. It's not, we're not here to tell you what to do. So that's like that kind of value. Some companies, they say, hey, I've been growing the business okay, like maybe I'm at 40 million revenue, 50 million revenue, but my struggle is to break through that. And the reason why is that if I want to get bigger projects, as an example, the client might look at me and say, hey, you have like 5 million cash in your bank, you don't have much asset.
The strength of the balance sheet is not there.
I grant you the contract, you go bankrupt. What am I going to do?
Yeah.
Right. So then now you got a public company, big brother, I can go sue them.
There's
like a soft mentality of public listed kind of credibility to that. Some of them really appreciate that, and on top of that, then all these practices that I mentioned to you, and over time people appreciate that. And those are some of the reasons that I think it's quite valuable to them. And then beyond that, we tell them we don't have no plans to sell your business on. And I think they
forever home,
right? And we cannot say that lightly, because it's like a commitment that we say to everyone. As soon as we sell someone, unless you have a very good reason that we do that,
unless someone offers you a ridiculous price,
right,
then
you're right. And we're also quite practical to them. Like someone come in and say, hey, like they want to buy your business for like 200 times profit. Then you're like, okay, let's sit down and talk about it, right?
Exactly.
And that's also the fiduciary duty of board directors also, right?
Correct.
So I think the fact that we are in it for long term, and quite, this is actually a surprising fact for me also. So a lot of them really care about the longevity of the business. The people that have worked with me for a long time.
The lieutenants.
What if you come in and cut them off and and then quite often these are the private equity playbook, right? And I don't say this in a negative term. I just say this, it's just a fact, right? Like
it's a reality,
model, right? It's a model that they play in. And then we tell them, hey, we're long-term partners, no interest to sell, and just continue to do your thing. Right now,
how do you bridge the valuation gap? It's always a tough thing, right? How do you bridge the valuation? It's
probably one of the toughest challenge in M&A. I think it's most of it is art, some of it is science. So there are benchmarks out there that we can help to educate people,
especially the sellers,
right? Sellers. And quite often we tell them, if you're don't listen to what we say, hire a sell-side advisors, right? Let them advise you what is sensible, what is not, what is market standard. And then we also tell them our investment framework. We are quite transparent now. 20% IRR, this is our financial model, right? We put it on the screen with them and we work through the math with them, right? So our team will punch in the number with them.
Some of them, they have never even seen that kind of projection. SME,
right? So I say, hey, this is how we decide on the parameters, and ultimately it boils down to two things. One, how much we pay. It's actually one thing. How much we pay is tied to how fast you think your business is going to grow. Right? So then the model is all out. Say how much you think you're going to make. And then this is how much we can pay you. And we're very transparent. If you think really cannot, then no choice. But then the nuance in the model is that there's earn-out component to it. Right? So if you want more, sure, we tie the performance of your upcoming years.
PG,
right? Yeah, PG. And then they understand, right? So our concept is very simple. You all get paid more, sure. If you're tied to the performance, then everyone is happy. Win-win. So our approach we want to find win-win deals or no deals. Right? There's no somewhere in between.
Don't need an if here, if there. It's just a binary switch in a way.
So we tell them these are like our formula. You can work with that, and then if you really find that your business is worth like 50 times profit and we can't bridge a gap, then no choice. Right? And then many times they walk away. Like some people ask, hey, why you offer me 8 times? Like Google is trading at 35 times.
I said,
then I'm like, brother, good point. Good point. I'm going to go buy Google stock instead. But I think this is a matter of market maturity. I think this is just a maturity of the market. I think it's getting better over time. And then actually another competitor is IPO. So sometimes you get owners that wants to go IPO, but this was a lot more problematic maybe 2 years ago. Where everyone, like the market is very hot and it's still hot. I remember I said hot, but a lot of them don't perform after that, right? And you started seeing a lot of companies that go public and then fumble. And many you probably know more than me that shouldn't have gone public to start with, right? But ill-advised, I want to go hit the gong.
Incentives is different. Because if you think about it, I mean, I do a little bit of M&A on the side, right, Eric? You know, the IPO advisors take up the fee whether the company goes well or not. It's an incentive structure, right? But for you guys, what you guys are aiming for is you're looking for the recurring cash flow 5 years, 10 years down the road, which is very much more aligned to the owners of the business. Right? So I think that maturity of understanding incentive structure, I mean, Charlie Munger in all his wisdom it didn't really hit me until I started doing M&A, you know. Charlie Munger had this phrase, show me the incentives and I'll show you the outcomes. Right? I love it because you look at businesses, you look at human behavior, you look at how you run your life. It's literally that. I mean, the incentive structure could be money, could be something like a goodwill and intangible thing. But so
you're right, 100%.
100%, right? It's like, and I mean, since you brought this out about IPO, Tong Kui-on wrote a fantastic article. I don't know, you read it 2 weeks ago?
I don't think so.
It's about the underperformance of IPO. He showed all the data. So he literally actually said even something to Bursa.
Wow.
In public, which let
me go Google this up.
Tong Kui-on IPOs underperformance. It's just about 2 weeks ago, I guess.
Okay.
Yeah. So
price to sell, not to perform.
That's right. Okay. That's the one. So literally, I've been showing this data for 2 years. And Tong Kui-on is someone of a media mogul, someone I respect very highly, right? And he's very direct, so he's good. And he showed all the data. And I think that's where, if I were to look back and try to figure out, it's actually incentive structures again. Because, again, upfront, right? I mean, to the owners, I think, like what you said, they maybe have been ill-advised. They don't know any better. And then for them, it's being marketed as it's an exit plan. But in exit plan, you know what I actually calculated even deeper? If your market cap is less than 200 million, average daily trading volume, it will take you 17 years to sell out your...
That's crazy. Actually, think about it, that's true.
You think about it, you want to sell, right? At the daily average trading volume, at least market cap, that kind of free float, and then you've got moratorium, right? So again, you think about it, if above 200 million, we calculated average, it takes them about 11 years to sell. Even then, it's still crazy, man.
So what would be the right market cap to go to market if your intention is to sell out over time?
Sell out over time, I think at least has to be $1 billion and above.
Okay, makes sense lah. But no volume, how to sell?
If you're Ace board, you're let's say 50 million, 90 million market cap. To be honest, that's what we, me and my partner, we're also trying to educate in the sense that, hey, if you want to exit, there are actually other ways. And I feel, correct me if I'm wrong, my understanding is that I don't think the market depth is there. The VC, the PE markets, we don't even, apart from Cradle, who's doing a great job, but we don't have that kind of market depth. And that's why that what do you call it, the education or the awareness is there. Is that what you see too, in a way, that kind of capital?
Yeah, actually, more or less that. I think a lot of people think of IPO as a destination, not a pit stop.
Understand.
It is a pit stop.
It's a pit stop to scaling, you know.
It's like you drive like F1, you stop and you change your tire and then you go harder, right? They see it as a destination. They think, okay, my job is done when I go IPO. But I think if there's one thing that I learned from Patrick is that it's just a part of the process, right? It's a fundraising exercise.
Correct. It's tapping the capital markets only.
Yeah, if you got no reason to fundraise, then don't go IPO, right? Because you add all these compliance responsibilities and cost.
Yes.
That a lot of people underestimate. I have a friend that it's a family business that went IPO, and they say, Eric, you know how much I make a month on salary? I make I can't remember, some ridiculous executive director make less than 10K. They say, why don't you just get your board to increase it to market? I don't know to get it to increase my salary. It's a whole shebang of remuneration committee,
resolution,
and it's like initially I thought I'd take smaller salaries so the profitability of company will be better, but now I'm stuck. No choice, I tell your dad to pay you a bit more.
Yeah, yeah.
So that it's funny to say, but actually it's a reality of
Yes.
like the unpreparedness of a lot of businesses. Right?
Correct,
They don't think
correct.
about all these processes needs to be ready. They
Yes.
think, okay, as long as my financial is ready, I just go.
Yes.
That's the easy part, right?
Yes,
The
yes.
hard part is then you have like no quarterly responsibility to your shareholders.
Yes.
You have shareholders that ask you like very difficult questions.
Yes.
Actually, difficult questions is one thing. Like terrible, stupid questions is a lot of them.
Correct. How do you handle IR? How do you handle PR? Optics, perception from the outside, like what you said just
You're
now.
right, you're right.
Yeah,
and
yeah.
there's like the scrutiny, right? The highs are very high, the lows are very low.
Yes.
But I think it's a necessary process.
Correct.
To be fair, I think a lot of US IPOs are also not performing, right?
No, they're not.
So I'm not sure if it can be it's like a solely Bursa thing, but I do think that sometimes it's more personal. I feel like I'm not sure if Bursa having a targeted IPO number is a good thing or a bad thing. Right, and this again to your point, incentive, right?
Yes.
Now you show him an incentive, I show you the outcome.
Correct.
We've seen the outcome.
We've seen the outcome already.
And being a exchange is a better idea to focus on quality or quantity,
Correct.
right? Like
Correct.
If you think about long term, yes, short term, yes.
Yes.
I feel good, I hit my target,
Correct.
but then what does it look like in 3 years' time? Right?
Correct.
Like, you want to kill the golden geese or you want to continue to have the golden eggs right, over time?
Correct.
I think that's a fine balance that we need to find.
Yes.
Yeah.
I think their aim of creating ADV, average daily volume, I think it's something good for the markets, no doubt about it. But I think, like what you said, that balancing act, you don't want to spook the market in a sense that, because you see, right, 97, prior to 97, I think there were much more retail market participation. And then today, Taiwan is at 60%, retail market participation compared to us is like sub-20s, right? That lost generation, I know of a lot of friends whose parents got burned badly during the 97 crisis, and they'll tell their kids, do not touch stock.
Buy crypto.
Buy crypto. buy land, buy property, right? But on the reverse side, you and I know of these like very astute retail investors that made, value investing, discipline, practice, and they made like tons of money, right?
Yeah.
So again, I think that level of awareness, that level of maturity comes with that balancing act of policies.
Yeah.
Because like what you said, if it's like spewing up, people in Malaysia, even some of the fund managers I know, they know IPO, how to make money. You buy pre, the day of listing, you get out at 15%. So it's sad because like what you said, it's a pit stop.
Yeah.
You want to make not 15%, you want to make 10x, 20x, but 5-10 years from now lah. Yeah.
Sometimes I wonder if this is just like an evolution of society as whole, where we want quick result, right? Quick we're in media business, we're very responsible for this also, right? Like,
correct.
You turn on IG, it's like 15 minutes, 15-second reels on TikTok, like very quick dopamine hit.
Yes.
And I feel like it kind of just disseminated across the world where you want quick fixes.
Yes.
And I don't know lah. I feel like the balance is required lah.
Yes.
Yeah.
So now going into your expo business, share a little bit of us, the nuance, how you got into it. Was it something you looked at from the very beginning, or it's like did you stumble upon it?
Yeah. So we had a bit of experiences in the expo business through iProperty business and iCar. We organized some events as like a supplementary thing, as a marketing tool for some of our customers, and as a way to get them online. Those days, like the struggle was to convince people online advertising is the way to go. So we use that as a bridge, right? So we have a bit of understanding of the business. What we did not really fully appreciate until we started talking to a lot of B2B trade expo is that how we got into it is actually we started talking to some B2C expo. So this consumer expo. And then through that we just like scope out the market lah, right? So let's talk to everyone, because to us expo is an expo. As we go in deeper into it, we realize B2C and B2B looks the same from the outside,
but it's completely different.
Completely different animal, right? Like different customer clientele type that you work with. The buyer and consumer behavior is very different. When you have B2B, it's very rational. Like I come here, there's my RI. Consumer is more like consumer behavior. I want to go shop and whatnot. And when throughout the whole process, we started talking to a bunch of players, did a bunch of research, and realized that there is a play to buy a platform assets and do a buy and build, similar to our media business. And why I say that is that there are some industry where, so on the cost side, you negotiate with the same vendor, same venue owner, so you can aggregate the procurement cost. Right? So there's like a cost synergy to it. And two is that there are a lot of subscale expo that maybe hire 8 people to run one show that can actually run 3 shows. Right? So you get the benefit of that because and the reason why companies like this exist is that you do need people, but not all the time to do it. You need to have certain roles, right? Like people that deals with sales, people that deal with like government relationships, people that deal with marketing. And it's all very distinct role. You can't hire someone that does everything. That's called an owner, right? Right? Like if you hire people, you kind of need that. You can try to do part-time, but this is a very professional environment, right? So you need continuity. So you have like subscale shows that have these kind of characteristics that you can actually synergize the cost. In certain industry, you can actually cross-fertilize exhibitors, which is the main source of revenue. And we also see like in Asia, some of the shows are quite under monetized versus the West.
I see.
And it's a bit like maybe I take a simple business model like train tickets, right? So in the West you have like peak time, non-peak time, and it's like the whole pricing engine behind it is very sophisticated to maximize revenue, right?
Yeah.
Here, KLIA Express is the same price anytime you buy.
Yeah.
Right? And sometimes it's good because if you don't optimize, it means the business is still doing fine. I don't know whether they are doing fine or not, but I assume if they don't do it, it's probably okay. So similarly, in the Western world, a lot of the shows have more sophisticated kind of revenue model where you can now monetize sponsorship once you get to scale. You can get people to sponsor your lanyard lah, put a logo out there lah, in the marketing material. So it unlocks new revenue stream.
I see.
Two is your pricing of your booth location can be a lot more nuanced now.
Understand.
Right.
Main door, prime location, higher price. At the corner, you know. Yeah.
And you can only do that at scale.
Understand.
It's very hard for you to do it at the start.
Understand.
At the start, you're just trying to facilitate the marketplace, right?
Yes,
get the supply in, get the consumer in.
And that takes time, you know.
It takes time.
Yeah.
And hence, you can do a kind of buy and build approach because to build, one is a lot of risk.
Yeah.
Unless you do like adjacent show, you can kind of incubate, which we also do actually on the organic front. So let's say we rent 8 halls, 6 halls for our main show, and then we incubate a new idea to the next 2 halls, and then if it gets big enough, then we spin it off as an independent show. That's like organic approach.
Understand.
So those are some of the characteristics that we like, right? And it's very, at a good show, you finish this show, next year it's like 70-80% booked.
I see.
So there's predictability.
But this is B2B, right?
B2B. B2B, like there's a show booked, that's like the expectation, you know roughly next year how you're going to do. The feedback loop is faster than what people think. Finish show, if you don't rebook, that's problematic, right? It's a sign. So this is like in the software world, it's called the ARR, the churn rate, or the revenue retention, right?
Yes.
This is a similar kind of concept to it.
Understand.
And then why we also like it is, actually if you think about it, it's a marketplace business like iProperty, like iCar, car list, right? You got the supplier, you got the consumer, or the demand, the demand and the supply. And the way you build a business also quite similar, right? So when you try to co-start the business, you always start with the supply side.
Understand.
Right, because no exhibitors, there's no people going to come.
Correct.
No agents listing it, no consumer going to come to your site, right?
Correct.
But then you need to do both at the same time.
Correct.
Right? So you got ding dong.
You cannot be doing just demand and then supply tada, or supply and then demand tada. You know?
So hence actually we understand the business very deeply. People don't get the idea that it's actually a very similar concept. The only difference that you can scale a lot faster than the digital world. Whereas you might take a whole year to ramp up. Like 1 year you got 500 booths and the next year you got 600. So the scaling speed is a bit slower from an expo point of view because it happens at a point in time, like over 5 days or 4 days or 3 days in a year. But the fundamental truth, or also the fundamental leverage or the things that you can pull, are very, very similar. Right?
Understand.
The pricing, the way you think about pricing, also quite similar. How do you stage out price increase? When do you know you can actually increase price? And then you look at your retention rate. You can start to analyze, if I increase price, how many of them are going to drop me?
Understand.
And then you can actually figure out the churn. And there are like ancillary revenue stream that I mentioned, right? So now you charge like, let's say a transaction fee, right? Or like a listing fee, and then in the future you can attach stuff onto it, right? So now I give you like a more premium location. You can boost your post up. I give you more premium location. You can be in front of the door. So there are a lot of similar nuances in terms of the business, but the skill required to run it. The people that you see running the business is a little bit different, right? Because of the digital nature and the offline nature, right? Yeah. But we like that.
Is there synergies? I mean, not so much the software, but there is a software. Software, expo, synergies? I'm pretty sure there are, right? A lot, right?
Here and there. So there are some software companies that we see that serves the expo industry, but we generally tend not to use that as a priority to do a deal. So typically synergies is nice to have because it's an overly used buzzword to justify deals that is very hard to realize in reality.
I see.
I think that's what we learn. So even internally, when we want to do a deal, then you might see us buy companies without profit guarantee and it's really for synergies. The CEO has to underwrite the number one.
Oh.
So next year, if you don't deliver what you think it's going to deliver, it's going to hit the bonus of the whole company, right?
Understand.
Yeah. So we take it very seriously. If you want to say, I'm going to use synergy to hit my IRR target, that two people's heads going to be on the chopping board, right? So the CEO and the deal champion has to really be able to underwrite that.
I understand.
And we track it. Like every month, did you say you're going to add $1 million profit? Every month is going to be 90K. Is that happening? Right?
Yeah, understand.
So we need that level of I guess, accountability to make it work.
Understand.
Yeah. But there are some benefit with digital media business across all.
Understand.
Right. So for example, some of the things that we do, like we have partnerships with like partners that want to run a coffee event, right? And then we have B2B expo that has somewhat like work in that environment.
Understand.
Or the exhibitors might want more media exposure, so we can connect the media business and the expo business. Hey, why don't you come with some extra packages, right? If your exhibitor pay you $1,000 more, then you can get some kind of exposure from our medium. So those are quite quick wins, but we don't bank on that on our business case or our investment case.
I understand. Because synergy as a buzzword, if it doesn't translate to numbers, it doesn't mean anything.
Yeah. So at the end of the day, we all have to. We joke internally. Don't mistake output for excellence, right? Like you don't get the participation award, right? Like you deliver the results.
I finished the marathon, but
you need to finish first. Second, right? Second.
Okay, so going forward, where do you think your risks and your bottlenecks will be? Because even at 5,000 pool, but your conversion rate is so low, and it's like high barriers to entry. These guys take like 10, 15 years to build. That means you're getting a pool that is lesser and lesser. So where will that bottleneck come, you think?
Actually, I worry less about the addressable market because now we are focusing on 3 pillars. And it's very deliberate, right? Like these are things that we know well. We're not be very good at it, but we will over time expand to new pillars.
I see.
Right. So there are I can't remember the exact number. Like in Malaysia alone, there's easily 1 million SMEs, right? Not to say all of them will fit our criteria.
Yeah.
But to find 100 like gems out of 1 million SME, I don't think it's a very difficult thing to do.
Correct.
So that's just on the Malaysia side, and we haven't really expanded across the region yet. Right? But our philosophy is always, whatever they operate, we want to be the number one in the category, right? So we want to make sure that we're very good in Malaysia first before we even expand. So say Expo as an example, we have opportunity to acquire businesses in Thailand, in Vietnam. But we make it very clear, no, like not now. Right? Great businesses, but we need to get our home in order first.
Yeah, right? Get the playbook right, well-oiled machine.
Then we are ready, we go, boom, right? The next one, right? And we know, and we build this pipeline in years. So just because we say no today doesn't mean that we'll say no next year, the year after, right? So we need to build a pipeline in view of that. So I actually worry less about the market size. I think there's a depth of market is there. We expand the country, we can add more pillar into it, and it's an active approach that internally we have someone looking at, okay, what else can we actually tap into? Your second question about maybe the risks and the challenges of what we're doing today, I think one of the things that I'm trying to do is to have a very coherent strategy across the group so that all the portfolio companies know exactly how they can interact with one another, right? Right now, it's a bit organic. And in some ways, you can say it was deliberate. In some ways, it's just not a priority at the moment, right? Because we want to see how the natural kind of equilibrium is, right? If you don't do anything, how does it look like, right? Then we know roughly what the end state is gonna look like, right? So at least the next 18 months, one of the things that we focus with the team is to really flesh out the what we call the chapter 2 playbook, right? So chapter 1 is you build the business until now, and then now you join us, your chapter 2 in your life. How do we make sure that they are fully engaged, they get the most out of the network and the expertise that we can bring to them, and they know how to tap into it, right? And that is, I think, very important as we scale. So this is like another foundation. So like if last year was to get the deal done, get the financing done, this year the call is to get the culture and the culture of collaboration in place.
How do you get all this domain expertise repositorized, best practices across? Is that roughly what you mean, right?
Yeah. And also be very thoughtful about what actually matters. It's very easy for us to say, okay, this is the industry benchmark, boom. But that may not be very helpful to the owner or the CEOs of the business, right? Want to know actually what are the top 3 things that you care about. So this year we have the first leadership summit that's coming up in a month time, around the 24th of June, right after our AGM, actually, an investor day.
Okay.
We will have a leadership summit with all the top 2 to 3 people across all the businesses. So it's about 25 people will be sitting in this room.
Nice.
And then we'll start sharing what we do. What are my unique advantages that can be helpful to you? What are the challenges that I face? What are the important introductions that I need? And I'm going to add in a culture building kind of session to get the companies to build their own identity. So we will have, the Catcha HQ will have our own culture code, right? And then we stick to. And we want to publish it to everyone so that everyone know how we behave, and what to expect from us. And I think it's very important, because if we don't do that, people don't know what to expect. They might start guessing what Eric wants, what Oscar wants, what John wants, and we don't need that. This unproductive time spent on guessing what you need. Right?
Correct.
This is what we expect, and it's very clear to people. And I think the next 18 months is really building out a solid foundation of what the culture should be in the group and in the companies underneath it. And there is also a selfish aspect to it, right? Because we want them to get the maximum value. So in the start of the year, I put out what is my goal this year is that all the vendors that join us will refer deals to us. And the only way they do that is that they have a great experience.
Understand.
Right? They have a good experience that, no, actually these guys know what they're doing. They're very helpful. My business grew. Practices are great.
They help you become lead gen.
They are the ambassador, right? So my line at the offsite is turn vendor to ambassador of Catcha Digital. That's start of the year offsite, my personal kind of my own goal.
I understand.
And these few years is all about that, because like you said, building the pipeline is not easy, right? In the past we brute force it, right? Because people don't know us, what are you guys doing? No deals, you never did any deals. This kind of doubts is slowly getting away, right? So we see a lot of inbounds now. But the strongest referral are the people in the Catcha group of families, right? They've been inside, they liked it, they can be very honest about what's good and what's bad about us, and then they can tell people, okay, here's what I got myself into. I love this, I don't really like that, but I think I love it more than I hate it. It's a win-win, right? And we're not so naive to think that it fits everyone. Right? But we want to create a very clear identity that, okay, if you love this kind of environment, come join us, right? And one of the things that's kind of side to this is that there are many entrepreneur community out there. You're training the likes of V-Stage, EF, YPO, there's a ton of them. We want to create an equivalent of that in Catcha Digital.
Understand.
That once you're in here, don't worry about all those guys. Right? This is where you should spend your time on, cultivate a community with all the other owners, share your vulnerabilities, and more importantly, we have skin in the game. Right? Which I think it's something that it just aligns that we put our money where our mouth is, right? And that's something that I'm gradually trying to piece things together.
Nice.
And it helps that I have been an entrepreneur myself, Patrick has been, and then there's we can get feedback from them what you need, right? Then we cultivate something that really is unique to us.
Yes. Do you think that what would be the nuances that certain industries can actually... What do I mean by this question? It's like, okay, you've got a guy who is doing exhibition, expo, right? And a guy who is software like Tita, right? Do you think there will be out of the box kind of synergies as well, in a way, when you share these kind of practices? Because it's like two completely different, right?
We do have some in the works, but by definition, out of the box means it has to happen quite organically. So I do think there will be some. Today, if you ask me to point out, I think we have some ideas, but nothing has been realized
yet.
So like for example, expo guys will be talking not to the software but the media guys. There's a bit more synergies in that. So there has to be some clear win-win proposition. That works for both sides, right? So there are some ideas, but is it groundbreaking that is unexpected? So far, we haven't seen any yet.
It needs more time to incubate, I guess.
They need to kind of talk about a bit deeper. There are some very quick wins.
Okay.
And by design, we designed this to find quick wins first.
Understand. Get the low-hanging fruit first.
Yeah, get the low-hanging fruit first, yeah.
So, okay, from the lens of an investor, you look at it, the early investors who believed in your dream in 2023 until today, they've not made money yet. Okay. What would you say to them? I mean, having a longer avenue here, obviously in the AGM, I'm pretty sure, or one-on-one reach out, they say, Eric, I think the more astute investors, I don't think they complain, they are more patient. But maybe for those who are still on the fence and looking at it, yes, you're going to have a certain bottom line once all the deals are done, but what will be a fair gestation period that when they put capital with you, it's like semi-permanent or permanent? What is the timeline that they should expect from you, in a way? If you're not 10-year money, don't come and see me. Or is it like, if you don't have 2-year money, you don't come and see me, What would be a fair expectation to ask over there?
This is a very difficult question. And I say it's very difficult because we can't really control how the stock market moves, right?
Understand.
And there's a lot of external factors also these days. What I think we can control is the performance of the business. And the commitment to building that. And if you say, generally, I think the investors that do quite well with us, that they take at least a 5 to 8 years horizon in their investment. And they spend time with us to understand deeply what we're trying to do. And we also understand, like, we are not for every kind of investors. Right? There are investors, and this is also something I learned, right? Over the years, I try to talk to everyone and figure out, okay, there are certain type of investors that is more suitable for us. And this tends to be people that follow Warren Buffett.
Value investor.
Value investors that really stay with us for a long time. We have like common investors that you also know that has been joked with me, right? Like, Eric, if I saw it at the peak, like from 2 years ago, I would have like been able to bought 2 Ferraris. Right? But that's a fair point.
Yes.
But the same can be said with everyone that is in the business, right? So about 65% of the stock is held by insiders, right? Our major shareholders, management, and myself.
Correct.
So we are very much vested in the success of Catcha Digital. If you ask me personally, like, at least I think for me, how long will we see the outcome? I think it's at least 5 to 10 years.
Okay.
I think what we're trying to build is not easy, but we have got a pretty good foundation. I think we can do a better job in educating and communicating with the investor community about what we do to make it less scary or less in like a black box. I think that's something, in reflecting on my own learning, I think that's something that we can do a better job.
Understand.
And we try to disclose as much as we can. And try now every time we have conversation about IRs, how do we simplify like the things that we explain to people, and then adopt global practices. Right. And that's quite important because we not only do we want to attract the top investors in Malaysia, we have aspiration to attract global investors.
Your Norges, your Black Rocks.
And there's like top investors investing in the peers that we aspire to, like globally, right? Hence, you will see the language that we use is fairly global, that is understood globally. I don't think there's many companies that disclose the reconciliation from like adjusted to statutory numbers to the extent that we do in Malaysia. But also we have to, because then otherwise it doesn't reflect the underlying operating quality of the business.
Understand.
But that's done by global practices, right? And we do that, and we deliberately pick words that's globally accepted.
I see.
Like APM as an example. We have to pick that so that in the future, when foreign investors look at us, they would be able to draw parallel very quickly, right? So if you think like today, we may not be a very good target for future investors. But we go to investor conferences to remain present, try to understand what people look at, so that we can get them interested and then participate in this journey. On a more, I guess, inside-out perspective, so that is more on, okay, now what we talked about is how much money can you make over how long, right? I think that's more a high-level guidance, right? But I think what I would also like to share a little bit more moving forward is really the philosophy of how we think about building these businesses, right? That what we're doing is not just randomly buying businesses, right? We're buying businesses and trying to make them better. And philosophically, I think, and this is at least our belief at HQ, is that we spend so much time working. you probably spend more time working than a lot of the people that we have here, right? And you want that time to mean something.
Precisely.
Right? And we're trying to create an environment where people want to come to work, not people need to come to work.
Not zombies.
Not zombies, right?
Yeah.
And I genuinely believe that if you spend so much time at work and you have a good work environment, you grow, it extends to your family, your personal relationships, your communities, and the country as a whole.
Yeah.
And maybe you might say, hey, this is a bit like rah-rah, fluffy, aspirational
Mambo
stuff,
jumbo.
right? But that's the truth, right?
Yes.
Think about how many people that you know that hates their job. They do it because they have to. And I understand sometimes economic environment requires you to do that.
Yes.
But it gets to a point where if you're past that, we want an environment where people want to work in a company. You don't have you have the psychological safety that this is an environment that generally is good for you. And we believe that if you empower people to do what they need to do and what they want to do, the business will grow.
Yes.
And legacies will be built over time, right?
Yeah.
And we take a very long-term horizon kind of thinking about this. And this is something that we generally internally feel is very important to have like a purpose of our role in society.
Understand.
So yes, we want everyone to make money. No joke about this.
Understand.
Right? Like, I also want to make money. You also want to make money.
Correct.
But what if we can make money and alongside have a very mission or purpose-driven environment that you feel very energized to come to work every single day, that you're doing something good with people that you care about, that has like positive impact in the world, right? So you won't see us going to businesses that doesn't fit into that.
Understand.
Right? Like this, for example, we talked about the gaming,
lending.
Hey, if you want to make money, those are great places to make money.
A lot of money.
But then you have this moral kind of objection about her. Like, do you really want to be an enabler of those sort of behavior, right?
Correct.
And this may be a bit more moral discussion, but I think it's quite important.
Yes.
And especially we live in a world where there's so many things that could go wrong. There's so many temptations, crazy things that you can do. So many mental health issues. I think as organizations, as companies, we have the responsibility to create a productive environment that's a net benefit to society. And I do believe like if we can do deliver results and do that at the same time, I think it's a matter of time like the share price will reflect.
I understand. Rather than just use ESG as a buzzword, it's really embodied into the culture.
I have very strong opinion about this ESG.
Same here.
But maybe we keep it to ourselves.
Correct. If not, we're going to drag on. Right?
Maybe we talk about this over lunch.
Yes. So maybe just last one or two questions. I think what kind of partners do you want to bring on board? And it could be from an investor point of view, because investor, I believe that you embody that investors are partners in this journey with you. What kind of company do you want to see more and more? And last but not least, maybe employees, if you're hiring or whatsoever, maybe from that angle.
Maybe broadly, the people that we tend to work quite well, if I have to summarize it in one sentence, are people that value differences.
Oh, nice.
And the reason why I say that is that we're in the partnership business, right? Like we try to get our employees to be partners in the business to drive things. We are working with owners and partners with them to build their business. The suppliers or vendors they work with, we often tell them that you're partners. We want to know even if you outsource COSEC, we had this conversation recently. It's like, how do we help you develop your executive to like a manager level? And again, I say that you might think, oh, this is like very larger than life, but no, it's very practical. If your guys are doing well, I will be doing well.
Yeah, exactly.
So how do we find like a win-win situation?
Yeah.
So generally, if I have to summarize it, is people that understand and value differences, meaning you and I can have very different opinion, but that's a good thing, right? This might be maybe it sounds very simple when we talk about it, but actually it's quite hard because it requires a person to hold two opposing thoughts in their head at the same time. Right? So if I summarize it, that would be that. But if I want to zoom in a little bit into like say founders, right? We tend to like founders that already have partners in the business, right? So they again stem down from like valuing the differences, right? They have been in the environment. They know how is it like to the net benefit of having a partnerships, and if they have longevity in a partnership, it's a good sign for us that we can also be a long-term partner with you. So financial metrics aside, those are very publicly available. Right?
Correct.
These are like some nuances about the people behind it. So we like that. We like partners or suppliers or vendors or relationships that people build long term. That you can introduce someone to me. I know I can trust the person.
Understand.
Right, and I can lean on your words, and that's a long term relationship.
Yeah.
That I can vouch for this person. Right.
Gentleman's handshake is his word, Kind
you're
of
right,
thing.
you're right.
Yeah.
Like Warren Buffett, I don't want 500-page document. I want a piece. Right,
Yes.
We want to be able to work on that basis because I think that's a simpler way to work. Like, I don't want to be second guessing people. Right, internally the team, same thing. Right, like everyone has got like a piece of what I call Rex document in the team, where it outlines your responsibility, your expectation to me, to the team, and to your direct report. The goals that you have and the skills that you need to build. Right, so it's very clear. Right, so it's very clear to me what you need and how do I serve that need for you.
Okay.
So that's on more like partner and then employees, people that I guess we have a culture code. But generally, people that work quite well with us is people that wants to have the we call clarity is courage, right, internally, right? Very clear mind about what they want to do, how we can enable that, how they can add value to us as an organization, but don't take themselves too seriously, right?
Have a laugh at yourself.
Right. I think we understand what we do is hard. It takes a level of intensity to get stuff done, but at the same time, we want to have fun doing it, right?
Yes,
so one of the things that we have internally is I tell them, hey, if you're not having fun, let me know, right? Like there's something wrong, right? If you find this is ridiculous, right? And if you're not having fun, means fundamentally there is something wrong with our decision making process, right? And it's already so hard, right? Like make it fun.
I usually like to end the podcast on a high, but at the same time, I think this is a very practical thing that we need to talk about. You announced the termination of the DS Services deal. We had many private chats before this. I love the way you handled it, but maybe going forward, do you think that you could have done it? What are the things that you will make it better, or how would you handle it better? Acquisitions in the future.
I think the best way to handle a crisis is not to have a crisis, right?
Okay.
I think when we were reflected on some of these deals that we called off, there was definitely an element of us trying to build momentum, if I were to be completely honest. And it's one of those things that you momentum begets momentum, right? Like you need to get it started, otherwise your car won't move. So I think there was an element of that, if I were to be very open about the reflection internally. So I wanted to say this was a product of circumstances at the time. Not a complete, it's not the reason why we did the deal to start with, but the reason why a lot of us pushed for the deal is because we wanted to do it. But that has been very clearly kind of discussed. So like in the future, we want to make sure that, hey, we don't do it because we want to do it. We want to do it because it's genuinely good. And we really don't want to have to go into situations like this. How do we avoid this, right? In the future is to raise the bar, ask questions very, very openly and challenge, right? Don't wait for people to come and challenge it. Like if you don't feel it, you think something is off, and for whatever reason, sometimes it's our reason, sometimes it's like the company's reason, raise it fast. Right? Don't wait until you get asked, right? If you don't get asked, then nothing happens. So I think step one is when we post-mortem this is how do we set up a culture where we voice that a bit earlier. The reality is, again, incentives, right? The team has an incentive to push through the deal. Right? The IC has an incentive to make sure that nothing crazy happens, right? So how do we balance that, right? So that we don't just do deals, but we do good deals that's good. But
at the end, you don't want to be too policing the deals that
you're right. You're right. You don't want them to be gun shy, right? You need them to be scoring goals, right? Rather than you want to kick should I kick? So it's a bit of a fine balance, right? So I would say it's a balance of not our investment committee has to be a bit more aggressive, not aggressive, a bit more proactive around poking, right? Rather than just trying to support the team, but at the same time, we also don't want to go so hard that no one wants to bring anything to the IC. Right?
Exactly.
So I think what we have done is we reflected on certain things that we could have done earlier. I think that we didn't really do. And we wanted to continue to do that moving forward and implement some of these learnings.
Understand. Eric, you know, you and I can go on and on, but at the same time, I'm just worried about the batteries of the camera. So
we're good.
yeah,
Still working.
Still working, right? Yeah. So maybe this is something I learned from Invest from the Best. Yeah. And one of the questions he likes to ask all his podcast guests is like, what has been the kindest thing someone has done for you in your life?
You should have asked me to prepare. It's tough questions. I listen to the podcast. Yeah. I always find it's a very good ending question.
Yes.
What's the kindest thing that someone has done to me?
It could be in a professional setting. It could be in a family setting. It could be in a friendship setting.
I wanted to maybe point to one, I think, quite pivotal conversation I had with my mom when I was very young.
Okay.
I think it's probably like 7 or 8 years old.
Okay. Oh, you remember?
My mom said something to me I remember for the rest of my life that kind of shaped who I am today, right?
I see.
My mom said to me, my mom was not very well educated, right? So
okay.
Didn't really graduate high school, but has a very kind, big heart. Yeah. And my mom said to me, boy, call it boy.
Okay.
I can't teach you how to study anymore.
Okay.
And I want you to know that so that you can go figure it out yourself.
Wow.
And I think it's very impactful because I think it takes a lot for parents to say that to the kids.
To be vulnerable.
And I think that's probably a very kind thing that she does. She could have just kept quiet and don't say anything about it. But I think that really shaped me to be a person that I know, okay, I have to figure things out, and it's fine, right? My mom is behind me, and she stuck out. She stuck out, right? Like she would send me to tuition center without even asking what subject I go for, right? So it's that level, like she doesn't even ask anymore, right? And I think that level of trust is underrated. I think as a parent, right, you trust your children so much that you just let them go figure it themselves. And I think now that I'm becoming a parent, I think a lot more about how do I want to be a good parent. And I start reflecting on like small little kind of conversation I had growing up that shapes me, my personality. I believe that a lot of these things happen when you're really young. And that was one of the I guess, I don't know if you classify as kindness. In some ways, I think it is thing that has happened to me.
And thank you so much for sharing that, because you gave me goosebumps, because when I was doing my book launch in Kuching, I was a bit shy to invite my dad, and he came. I had to hold back tears as well. So these are things that, you know, sometimes you only realize when you grow up.
True.
So Eric, thank you so much for your time. I do believe we will have a very meaningful friendship going forward, as well as investment stewardship of you and your company. I wish Catcha all the success, and maybe looking forward to hearing more milestones from the company. And thank you again for your time.
Thank you, John.
Yeah,
Appreciate it.
Yeah.